T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, remaining start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now in estimate.
Okay, you sound good.
Discovery Houston, negative return.
Copy, a negative return.
I'm too sexy for my love, too sexy for my love, love's going to leave me. So sexy it hurts, and I am too sexy for Milan, too sexy for Milan, New York.
morning, you filthy apes. Welcome to AMC and ADD, where we buy, we hold, and we screw the hedgies. Screw them! Screw those hedgies! Ah, another fine morning. Not a bad Q4 report. A little too sexy for that song. Oh man. Oh, I didn't know how you guys were gonna react. I was sitting there thinking to myself like, I think this might be going too far. It only took one comment. It took one comment for me to realize that no, you could handle it. You could handle it. And Peter C, you know that brought back memories. I know you know it brought back memories. You guys can laugh. You can laugh. It's over. It's only 2.5 minutes of your life wasted. Oh man. Gosh, those were the days. Those were the days. I don't know. I can't. I thought it was funny. Alrighty. Tim says, I did have to turn my phone volume down so my son didn't hear it. Oh, oh my. That was played on the public radio way back when, Tim. Oh, dog, you never heard that song before? Oh man. Yeah, I'm showing my age. Let me put on my glasses here. Guys, I have not yeah, MTV days for sure. For sure. I did not put on I didn't put on anything. I'm wearing clothes. Um I didn't go through the Q4 report. I didn't pour through it. I didn't put on my reading glasses last night and go through it, but I did listen to it, and I thought maybe it would be more fun to kind of save it for today with you guys. Go over today with you. We can kind of take a deep dive into it. Danny says when he said I shake my tushy, I started doing it. What's wrong with me? Oh, no kidding, Nosa. No kidding. That's why this company is too sexy for this market. I tried to look up uh, rhyming words for market, and I guess I just never really realized how hard it is to rhyme to market, and I just gave up because those words were just terrible. I mean, there's rhyming words, but they're not very good. Things like target, market, and target. It's just I don't know. They don't really match to me. It doesn't really go well together. All right, the glasses are clean. It's time to get to business. The business time is on. Let's do this. Let's take a look at our numbers here. Monty's got Monty's straight to business. All right, Monty, I'm putting you down here, buddy. Let's see here. Monty's got. Oh wait, I gotta write it next to it because I don't think any of us got price prediction points. Monty, Keto was the closest, but it beat him by just a few cents. Let's see. So I got your price prediction down, Monty. Thank you. Um, Let me log into Fidelity and then we'll go over these numbers here, guys. I know I'm starting 30 minutes late. I appreciate you guys being patient. I know some of you kind of screws you up because you're used to the normalcy of 6 a.m. my time every single morning, and I apologize, but technical difficulties called sleep. I literally woke up at 5 a.m. my time, an hour before I had to, and because I had set my alarm an hour early the day before, so it went off an hour early again. So I turned it off, and then I panic woke up right when I was supposed to, and I was like, oh man, uh, it's good to go. I'm fine. I'll just sleep for 5 more minutes. That doesn't work. Wife calls me up. She's like, get going. I'm like, oh yeah, all right, fine. So I just figured I'd kind of give myself an extra 30 minutes today, just kind of like, get the morning started instead of like just rushing, because I could have got on here and started the show on time, but I really don't. I hate rushing. I really hate rushing. And when I looked at the data, I was kind of like, there's no rush today. Nothing to rush to. So let's see what we got here. Let's take you guys over the stats page. While I move over a couple pages. So we're going to kind of have to rush through some of this stuff real quick to get to our 7 a.m. pokey stick in time. So, all right, let's start with price prediction tally. Nobody got a point, so the missed column gets one. The closest person was Keto. He had 1839, and the price was 1832 for close. Second closest person. Oh, hey, it was me. I had 1880 to 2180. So yeah, we were all pretty. Oh no, wait. Eric had 17 to 20. I missed it. I missed Eric's point. Eric got a point. Whew. He saved us from getting a missed tally point. But then again, he pulled away from the rest of the group. All right, Eric got the point for 17 to 20. Let's take a look at the rest of the numbers here. Short exempt volume. 72.6 yesterday. Utilization, I already updated the Vortex. It looks like it's still 100%. Our day over day price increase was a decrease, so we're gonna have to change this to a 0. 0 days, which means it goes back to red. And day over day price increase was a negative 2.86. Not bad considering we were down, shoot, like 6 or 7% at some point yesterday. Not bad at all. Nice little recovery at the end of the day there. Taking a look at the off exchange, our final numbers for the day yesterday, let's see what those were. 47.17 and 15.28 were the final before I updated. Oh man, that's got to be today's numbers. Nope, it says AMC volume 3.1. Weird. Oh, no. I have to show you guys something. I know why this is. Abnormally weird low volume on the off exchange, 42.27. That's like almost 10% less in the off exchange than normal. The CBOE EDGX was still very, very high in the ETFs going out there, like almost 2% higher than normal. Let me show you why the off exchange was so low. Zulu, I'm your father. Somebody showed me this. Somebody sent me something. I'm going to show you why this is. Not right this second. I'm going to go back to it. Here's my you guys can't see the trampoline. There was an extremely large amount of volume that was showing up in the off exchange, or on the lit market rather, which I don't see on Webull being reported. And somebody sent me a picture of it, and that may be to attribute because it was about 2 million in shares, and it hit the market. So I'll show you guys here in just a minute. We'll pull that up after I'm done going through all these numbers, but that could explain why the off exchange was so low, because if we had on a really low volume day where we had like 30 something million, then all of a sudden 2 million comes on a lit market all at the very end of the day, and That would definitely decrease the percentage going into the off exchange by quite a bit. So we'll take a look at that here in a moment. Moving down to Ortex. Let's give that a fresh update and see where we're at here. See if the lines are showing up correctly for me. Yeah, we're still at 100% utilization. The Ortex estimated current short share interest of the free float is not showing for whatever reason. But it looks like it's reporting as 20.11, but I think that's yesterday's data. We'll give it an update here in just a few minutes again and see if it changes. Heading up to the top right hand side, 187.944 million in institutional ownership. Let's give that a refresh and see where we're at. 187.941. 187.941. So just a small decrease, very, very small, like 3,000. Moving down to Max Payne, 1750 on Monday, 18 yesterday. Today, I'm going to stick with 18. I think maybe it stays at 18. Refreshing, still is 18. And options. Scrolling down just a tad here to look for our lottery ticket winners at a $45 strike price. Yesterday there were 17.3 thousand contracts at that 45 strike. Today there's 19.5. So a bit of a jump there. Little bullish activity. Open interest. Highest amount of open interest on the calls. Closer to where our strike price, or closer to where our share price is. At $20, there was 15.3 thousand contracts for the calls yesterday. There is now 16.2. That looks like it's kind of cooling off a little bit there. And then on the put side, at a $16 strike price, yesterday there was 11.4 thousand contracts. There's now 11.7. So not much of a change on that one either. Most of the activity is kind of hedging right off of 18 to 1850 for closing for this week, which is higher. That's higher than what we started the week out. Week out started out at 1750, so it's climbing. All right, give me just 1 second here. I'll take you guys to the other page. Over the main page, let's give this Ortex a refresh and see if they're starting to report this estimated short interest. Nope, still not reporting it. Let's see if they reported everything else. Okay, they're reporting on loan amount. They're just not reporting their short share interest of the free float, which should be this number right here, 20.11, but that's yesterday. I'm pretty sure that's yesterday's number. So, and if I pull up Ortex down here on the chart, it's still saying February 28th. So they haven't calculated for today yet. For some reason or another, they're kind of behind and not calculating. Usually it's in there by 6:30 in the morning. So no update on that number yet. But however, the on loan amount, and let me zoom in on this so you guys can see it a little bit better here, but on loan amount has increased day over day. We went from 115.9 to 116.2, so small increase. There's our utilization. What day is it now? 16. Day 16. On loan average age per day. Is that calculated for today? Yep. Still driving upwards. Looks like we're gonna head for a new top again. a new high top, all-time high top. The last high top was 80.39, all-time high. We're currently 77.33, and we're increasing by about a percentage point per day. So like 3 more trading days, and we'll probably reach a new high, all-time high. Orders by Fidelity customers. Let's see. AMC and GME are not on the top 10 in volume for this morning. AMC coming in at 16th. Yesterday we had a great 71% to 29% buy to sell ratio. Beautiful. Beautiful, beautiful, beautiful. Keep up that buying pressure and we'll be looking good. GME has its shares locked away, so they can't come out to play. Not on the list. SSR triggers today at 1649. I've already got that on the chart. You'll see the dotted lines moved. Shares available to borrow. Let me refresh this one more time here, just because I wrote down these numbers before I started the show today. Looks like it's only been an addition of shares returned since I wrote them down. But as it stands right now, so far today, they've borrowed 2.35 million shares. Yesterday it was 3.9. Fee has gone back up to 0.8 from 0.7. Calls, we have 17.5 thousand contracts in the money on the calls. 74.3 thousand contracts are out of the money on the puts. A lot of puts out of the money right now. A lot of puts. But we also have a lot of out of the money calls. 125K. Batman. I wonder if anybody's seen Batman. Don't tell me. Don't ruin the movie for us. Don't ruin the movie. Don't you dare. Don't you do it. I see it on tomorrow. I see it tomorrow. The NASDAQ is down 1.59%. Dow Jones is down 1.82. No, this is all yesterday. I'm sorry. I always forget that I have to wait till market open. I'm looking at this. The eastern side of the world was down. So we're likely going to see a down day today in the market. Europe was a little bit up. I guess we'll have to wait and see. I haven't looked at the pre-markets at all. IWM is up 0.55%. Tesla is up 0.96. Amazon is up 0.24. Cinemark is down 1.51 in the pre-market. And they have an earnings report coming out. Doge is down 0.04. Bitcoin is down 0.81. GME is up 1.35. Hood is up 0.85. And AMC is up 1.15. Our inflow versus outflow final numbers were 9 million more in outflow than inflow yesterday. We have 83.88 million, not million, thousand shares having been traded so far this morning. That's higher than usual. We have about 6 minutes more till our pokey stick of volume. That's about, I want to say almost double what we've been seeing for like the last 2 days. So that's definitely some more volume going in to this morning here. On the daily, this hot mess in here, we're just going to look at Vortex Indicator and RSI. And we've got more selling pressure than buying pressure with an RSI of 49.35, which is right down the middle. On the hourly, we have more buying pressure than selling pressure with an RSI of 52.65, which is right down the middle. 30-minute, we have more buying pressure than selling pressure with a crossover in the last 30 minutes. And RSI is at 51.90, which is right down the middle. So we've cooled off enough to be able to start another run. On a 5-minute interval, we have more selling pressure than buying pressure with an RSI 5702. So RSI is cooled off. I take that back. The 5 minute just switched over to more buying pressure than selling pressure, with RSI still starting to rise a little. Starting to rise a little. Hmm. So yeah, nice little ascending channel here. Let's check out what I was telling you about. Why in the world was off exchange so low yesterday? So low. So low. Oh, Tim was reaching out to me and said, "Hope you're okay." Thanks, man. I appreciate that. Let's see here. Let me find. No. Ah, yes. Mohammed sent this to me. I don't want to give away Mohammed's information, so this is what I got. This is what he sent me. So market was trading. This is at the close. Right at the close yesterday. 2.7 million shares hit the market right at 1602. 2.7 million. And it shows up as a sale. Actually, it looks like 2.7 million twice. Very, very interesting data, especially when it doesn't show up over here. Yeah, there's not enough volume to support the idea that 5 million shares were sold during that period of time. There's a very large chunk of 700,000 shares sold or bought. I mean, it looks like buying because it's going upwards, so um, it would be considered buying volume, but nothing to support the idea that there was over, let's see, it was 5.4 million shares sold. Very interesting. There's my tramp. I put it in the wrong spot. Should have been over here. Let's get rid of Trampy. $6.58, 2 minutes to the pokey stick of volume. I think I'm going to spend the 30 minutes that I have between market open and um, my first look at and normal analysis, spending it looking at the earnings report from Q4. Let's see what you guys are saying here. Yeah, GD. Adam Aaron said 90. He said that we have at least 4.1 or more. He wasn't really specific. He just said that we have the same amount, at least. We have at least the same amount of owners that we had back in June of last year when they did the shareholder count, and so he's saying that people weren't going away, and he added to that when they reported we owned 80% of the float last year, it's now 90 or more. And it doesn't matter how you spin it. Hold on a second here. We have 113 in volume going into the 7 a.m. pokey stick of volume, and so far the pokey stick is only showing 24,000. Let's see how that turns out here. He said it doesn't matter how you cut it because what I was going to say was is that when they do the shareholder count, they only count eligible voters when they do the shareholder count. And as many of you know, for those of you who were unable to vote, you were not counted as a shareholder, believe it or not. So of the eligible voters for the shareholder um, vote or count, you're not included, which means that we own more than 90% of the float. And but you don't have to, it doesn't matter where we went. By the way, I owe JP an apology. Is JP, are you here? If you're here, JP, raise your hand, say something. Uh, I owe you an apology. We did some more digging last night and found out that I was wrong when I told you it was North America. I made an assumption, I think, at some point or someplace down the road, I made the assumption that only North America was allowed to vote. That's not necessarily 100% true, but it does make up a large portion of the voters. Cannonball Bronco says the 2.7 million sales at close yesterday appeared instantaneously. I remember it because instantly pushed volume right over my estimate. It never showed up on a candle. That's really weird. All right, let's see here. Pokey stick of volume 28. Very, very low volume. I feel like more often than not when you have extra low volume on the pokey stick compared to the actual volume that hit the market, that means upwards pressure. That is very low. 114. Let me just do some math here real quick. Wow, that is super low. I mean, I can't even. That's so low that I can't even. I can't even change my volume prediction. 25.45. Cannonball is saying 48.8. I got you down, Cannonball. I'm not writing down the rest of that. Yeah, I will. I'll write it down. That is really, really super low volume. But I have to go based off of what I see, and right now it's only 114K, so I have to say 25 to 45. Remtac, you're not kidding. Mohammed, I believe so. And what you got to realize is is that there's a lot of synthetic shares. There's a lot of synthetic shares out there. So even though we own the float and they can't talk about synthetics, um, there are shares out there that can be used. No, I haven't tried to get a hold of anybody yet, Gary. Not yet. I usually save that stuff for like weekends. I usually don't bother people on the weekdays. Just, I don't know, because I know people are busy, but I usually save it for the weekends. Froggy's polls estimating 500 shares per ape. I think that's very, very close to the number that I kind of got from the Say Technologies shareholder. Let me just check and see. Million, billion. Yeah, I got about 532, 533, based on the Say Technologies share count registration. So it's very close. Ooh, I've never kept those kind of statistics, Remtac. So I don't know. I'm not 100% entirely sure what the smallest pokey stick we've ever had before. Um, it's now your job. And the first number to write down is 28.9 thousand shares. That's pretty low. Because I usually expect the 7 a.m. pokey stick of volume to be at least half or double, is what I should say. So whatever our current volume is going into that minute, say we have like 50,000 shares traded so far going into that minute, then we should have somewhere close to 50,000. There is a little bit of give or take, maybe 10,000 shares or so, depending on how large the amount is. But it's usually really, really close to doubling. And this one's not even close at all. This is like 1/3. So let me pull. I don't even have the Q4 report pulled up here. Let me pull it up here. Let's see. AMC company. Wow. I go to Google, I go to type into the thing, and it's got AMC's website already listed. I don't even have to type anything in. That's kind of cool. The just in case you guys are ever looking for it, if you go to their website under extras is something called investor relations. It's one of the tabs inside of extras. You can click on that, and that'll take you to both. They have their Q4 earnings webcast, which you can watch or listen to, I guess. And then should have at the very bottom close to the really bottom portion of the page, there's view all quarterly results. There's fourth quarter 2021 listed there as soon as you pull that up. And so I'm going to pull that up and look at that earnings release PDF. They also have the webcast. So I've got it pulled up now. It is a total of 17 pages long. So not really that long. Should be pretty simple to go through. And we'll take a look at this together after the show for those first 30 minutes after market open. This is gonna be pretty quick to go through. I'm just kind of looking at it right now. I can't. It's funny. Yesterday I was listening to the show, and they kept saying that I can't say it. The EBITDA. I can't say it. I can't say the word. I kept hearing them say it, and every time I hear somebody say it, I feel like, oh, I can repeat what it is that they say. And then after I've heard them say it, IBDA, I think, something like that. I have a terrible pronunciation for IBDA. I have a hard time saying that. EBITDA. EBITDA. Can't do it. That's all, folks. So you guys are like trying to help me out. I appreciate that. Ibida. Ibita. So I've got one saying Ibida and the other one's saying Ibita. Two does, one ta. I don't know which way to go. Jeff says, I'm doing some research. I'm reading there are supposedly no synthetics being reported. We know this is BS by the math, very conservative. This is 2 to 3,000 versus maybe 500. I'm rethinking my numbers. Trent says, yabba dabba doo. Lou says that with those numbers, there's only. Oh my gosh, Gary, please, you're killing me. The first, the first two words of that sentence are the worst words ever. I don't care. 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 I'm garbage in, garbage out, Gary. Garbage in, garbage out. What you take into your mind is what you put out of your mind. I mean, I'm not trying to get on you, Gary, at all. I mean, it's not you. It's not you, it's me. It's me. It's me, Gary. It's totally me. I just need to move on. I need I need to grow, Gary. I need to grow, and I'm just not growing. I need to move on. I need to find I need to find a better place. I'm just not happy, Gary. They can oh man. I feel torn, Gary. I feel torn. I feel obligated to give you an answer. I legitimately feel obligated to give you an answer. And I'm going to say that there's only 125 million synthetic shares. Um, I mean, it's really simple to do some very easy math. Let me just show you something here real quick. It's killing me. All right, it's real simple, right? Go to Fintel. You can do this math yourself. Go to Fintel, take a look at institutional ownership, right? I read it off this morning already. It's 187.9 million shares. What is 90% of the float? 516. They've updated the float to 516 eligible shares. So you take 516 million times 0.9, right? And you get 464 million, right? So that's how much Adam Air says we own at least, right? So we know that we own 464.4 million. Then you add in institutional ownership at 187.9, and that's 652. But then he also said that that's not including our 90% ownership is not including any of the ETFs that are out there. And so if you go out to the ETFs and you look at how many shares are owned through the ETFs, um, it's a buttload. It's a buttload. But the problem is this. The problem is this. There's more than that. There's short interest. There's on loan amount. How much is on loan? Let's just take a look at that real quick. What do we have on loan? We have on loan currently 116 million on loan shares. So we can go ahead and add that to the number, 116 million. Then we're going to add in. I'm not even going to go through. I mean, it would take forever. Let me think if there's a way. I wonder if ETF.com will show me that information. I'm not even gonna go through the ETFs. I'm not even gonna go through them because I think I have enough numbers right here just to prove what I have so far on the calculator right here, and I'll pull it over so you can see. I have 768.3, and I'm just going to minus out the 516 that we're supposed to have ineligible. So I don't know what the hell Lou's smoking, but I got 252 over a million already, right? And that's just using just very easy numbers pulled from like three locations. How much we own, how much institutions own, and what the float stands. And I'm already at 252 million over. So Lou can go smoke a crack pipe because he can't math. He can't math. I mean, it's so simple to do this math to just find out that we're like way well over that. I'm telling you, it's in the billions. I'm telling you, it's in the billions, Gary. You don't have to take my word for it. Say Technologies did the work for us. We know we're in the billions. So why we even talk about how much we're over on the float, I have no idea. It's kind of ridiculous. It's really quite ridiculous. Bill says we need to stop calling them synthetics and call them counterfeits. Boy, I tell you what, there's some truth to that, Bill. There really is some truth to that because by calling them synthetics, it almost kind of lessens what it is that's happening with them, and they are counterfeits. Keto says he's way off when he says less synthetics equals less price. Synthetics and price aren't really like you can't really they're not um, they're not interchangeable. And that's actually very wrong. I would actually say it would be the other way. The more synthetics that you have, the more the price can be manipulated, right? It's an overabundance of inflated um, volume. Inflated volume with lower price means synthetics. So the more synthetics that you have, the more deflated price you're going to have. So it would be the exact opposite. But but I don't really relate price to synthetics though. Einstein says, "We know they have been stalling this for time. Do you think it's an event they are waiting for, or just running out margin?" I really think they. So the question, Einstein, you really have to ask yourself is who's they? I wanted to find that out a long time ago, and I missed that opportunity by a month, and that the log the float was created. But I think, and I'm not going to really go into that, but what I want to say is that you need to understand who they is before you can begin to understand what it is the question is that you're asking. You want to know what their um, objective is, and unless you know who they is, you can't possibly know what the objective is. So knowing your enemy or who your enemy is more important than anything, and we really don't know. We think it's the hedge funds. We like to have somebody to place the they onto. But I would challenge you to believe that the they that you think it is not the they that you should be focusing on. Because I don't believe that it's hedge funds specifically. It's much bigger than that, much bigger. And I know it sounds very tinfoil. It sounds very tinfoil hat of me to say something like that, but I think it's the truth. And I think there's very clear signs that our market's being manipulated in ways to avoid a market crash. And the they who manipulates the market is not specifically just hedge funds. I'm glad you feel better, Gary. And again, I don't want you to be Gary, you're not the focus, right? I want you to understand that. I'm not picking on you. I get it all the time, everywhere, and it's just kind of like, you guys got to break out a calculator. Break out a calculator and figure it out for yourself and realize that the people who are giving you numbers are idiots. And once you come to that realization and you stop putting idiots information into your head, you stop promoting those people, you stop watching those people. You don't have to watch me. I'm not telling you got to watch me, but I'm telling you, stop promoting people, stop clicking on people's YouTubes, stop giving people platforms who say stupid things, because it's time to get past that. It's time to it's okay to want to have fun. I understand that. I understand that it's funny to watch somebody who's an idiot, um, and that's cool. Like, I love Beavis and Butthead too. I'm a total Beavis and Butthead fan. But understand that it's getting in your head, and you don't want to poison this. You don't want to dilute your head in a play like this with bad information. So, but it's not you. It's all of us. It's all 50,000 people who click on it, who subscribe to his channel. It's all those people. They're giving him a platform to say the things that he says. And I don't care if he's getting paid or he's not getting paid. I mean, just don't give somebody a platform to say things that are dumb. It's your money, it's your choice. That's it. Keto says it's the PPT. I would tend to think that you may be correct about that, Keto. I don't know it for a fact. I can't prove it, but you might be right. Ooh, Peter wants to know. That's a great question, Peter. I don't think you can. Gary says, but we love you. I know I'm an idiot too, Gary. I know I'm an idiot too. I don't always say smart things as well, so but you don't have to give me a platform. I'm going to be here one way or the other. And, you can give whoever you want a platform. Man, Gary or Peter, I'm trying to think of how do you calculate potential price based on possible synthetics? You can't. You can't, because you'd have to know what the potential shareholders are willing to sell at, right? And that's really what it comes down to. You have a deflated price to existing volume. The volume has to decide what price it's willing to sell at in order to understand what the realized price is based off of those shares. So the calculation is very similar to a call option, right? Has limitless potential for upwards movement, I believe is how they define a call. Einstein says, I believe they are 1% whose monies were extremely mismanaged by banks and hedge funds due to greed. I mean, the they Einstein could be lots of people. It could be large organizations. It could be the 1%. You don't know who the they is. It could be the government, um, or it could be a conglomeration of all of those put together. Um, but we really don't know who the they is, and until we have that information, we're never gonna know why things are happening the way that they're happening, unfortunately. which could be years after the squeeze happens. Years and years and years. You know, I don't want it to be about me, Gary, because I think it's all about all of us together, right? Like I'm just you. I'm you. And um, you have the ability to do what it is that I do. If I can do it, I know you can do it. I know you can. So and it doesn't take long to like break out a calculator and figure this stuff out on your own. Look at Nosa Good in town here. Look, look at Nosa Good in town here. Retail 463 million plus institution 180 equals 640, which means 124% of the legal float. As Ortex reported, but only 85% of the data. And then this means that the short interest is around 20.3%, 24% times 0.85, which matches the reported SI, right? Oh my gosh, you're gonna make me math, Nosa. You're gonna make me math. 463, 180, 640, 124% of the legal float. 20.3 is really close. So let's go back to Ortex here real quick because I just want to see if they reported. I'm going to refresh it real quick here and see if they're reporting that short share interest of the free float. They're not. They're still not reporting it. So really, I guess I'll say this. The SI short interest NOSA is a reporting of how many shares are in open interest compared to the float. So it has nothing to do with the outstanding amount of shares. But what you're trying to come up with is you're saying, and I see what it is that you're trying to do. You're trying to say like, no, short interest isn't really 20.3. Short interest is more like 24% because if you take the amount of available shares out there in existence according to what the 90% and the institutional ownership, then the amount of short interest would actually be much higher. So I'm not going to do the math. I'm going to trust that you did your math, and I'm going to tell you that you're right. The short interest is much higher. It's much well, actually, it would be lower, wouldn't it? It would be lower. Wait, hold on. It would be lower. Short interest would be lower as you have more shares in existence. Oh, Brave Bull. I had another Brave Bull last night. Hey, you're not lost, Gary. You're not lost. You're just finding your way. Peter says I don't have the laugh you have. I'm not qualified. Yes, you do. We all have our own laughs. But it comes out of the float total, right? Yes, that's correct. So it's based off of just the float. So, but what you're trying to get at is well, or at least what I feel like what you're trying to get at is that the float is actually higher because of the synthetics, which means that short interest would actually be lower, but only because that there's, a much more inflated amount of float that there should be. Sounds good, man. G, take care. Have a good day at work. It's crazy that retail isn't selling and they own 90% of the float, so 10% of the float is controlling the price on the lit market, usually 30 to 50 million volume a day. Yep. Oh, Yishin, I don't know why. Oh, see, now Bird Eye gets it. I like it. Imagine what the 90% of the buy can do price when it's actually used. That's the popping of the balloon, and the volume will just absolutely when those shares are eventually used, the volume will just absolutely blow up. Well, we can rely on the reported data. It's just that we know that the data is only representation of what we know. So, and if you know that it's being calculated based off of what is supposedly in existence, then it's just simply a representation of it's a benchmark. It's a benchmark that says, okay, this is what we're reporting. This is what the benchmark is, and this is what the uh, average, or this is what the percentage of the difference is. Keto says that explains why short interest hasn't gone up as much, right? I mean, yeah, it really it does explain that, right? And yeah, that's why I have said this in the past. Like, I don't use short interest as a value that I see as being an influence on whether or not we're doing well or not. I see it as an indicator of what's changing in reported values. Okay, Nosa's saying, but our indicators are partially based on reported data. Yes, but you still have to use it as like a baseline. Because even if the data is inaccurate, it still gives you a baseline on what's happening. No, Gary, move up to the front of the class, man. Start teaching the class. Get up, stand up, teach the class. You can't learn. The best way to ever learn something is to teach it, right? Man, I'll tell you what. Sometimes somebody tells you you have to give a presentation on something. What do? You really learn it, don't you? Because you don't want to look like a fool in front of everybody when you go to stand up in front of everybody to start talking. Or some people don't mind, I guess. I see. I see where you're going with that. So they have to report some of that stuff though, which is I see where you're going with that, Nosa. I see where you're going with that. The thing is that we're still getting the numbers that we need to see, and we know that we know that they're well beyond. Ryan, I really hope that that's not the case. Um, but I have said for a long time that we wouldn't guess what the catalyst was going to be. I wouldn't. I would hope that's not the case, though. Refresh Vortex. Okay, I'll refresh it. Did we finally get our data? There it is, 20.14. and 52. So not very many. Only one. It seems like only one institution's reporting cost to borrow right now because we've got CTB min, average, and max all at the same values. Borrowed change is at 52, so I'm gonna write that one down. All right, guys, I'm gonna take my break, and I will see you guys 15 minutes. 15 minutes before market opens. I'm gonna leave you with this though, Nosa, and for others. Ketos, I got you down. Let me put you down here. 1813 to 21:30:13. Gotcha. Um, did utilization go down to 99? No, it's still at 100. Utilization still shows 100 on my screen. I'm not gonna say that, Samuel. I'm gonna leave you with this. I did want to say one last thing on the topic, Nosa, that you were talking about. Ooh, we got a nice little dip down here. Um, Even though the values are misreported on Ortex, the values that we still see that make big impacts uh, are still shown, right? So that's I don't look at short interest. I really don't look at short interest as a I look at it as more as an indicator. So let me pull it up over here so you can see. I just want to say this real quickly about this because I understand where you're going with this, but this is what I want to show you, and this is how I use it. When in terms of looking at short interest, I look at it like this. I see an indicator that's moving up and down, but what I'm looking for is what does it do compared to price over time, right? And one of the things that I notice is that short interest falls a bunch before, well, not necessarily. It could be small amounts, but it could be large amounts. The reason that it fell a bunch right here was because of shares being injected into the market, but it did still fall before a price increase. This was another example right here where short interest fell and there was share dilution that was happening at this time. Here's a decrease in short interest as price started to rise. Here's another instance right here where short interest started to decrease just before price started to rise. Here's an instance right here where short interest starts to decrease as price starts to rise. Not really much of a decrease here where price started rising, but I see it as an indicator for where price may be moving to. Here's a dip right here in short interest just before price rises. So when you see that, when you see short interest has an impact, or not has an impact, but has a direct correlation to what happens to price in the futures, it gives you a good indicator to what to expect or what may be coming. I don't look at it as an indicator. I don't look at 20.14 and go like short squeeze because it's over 20. That's not how I look at that number. I look at it in relationship to how is it being reported compared to what does it have, how does it price impacted when that changes. And so, it is an indicator that you can look at that. And why does it make sense? That's the other thing you want to ask yourself is why does it make sense that short interest would fall before seeing a price rise? And it's because nobody wants to short a stock that's going to rise in price. So they dump their short interest. And so why does that make sense? Well, short interest is going to go down just before price rise because nobody wants to get caught. So regardless of whether this is a correct reporting of data or not, it's still a benchmark. And if you know what to look for in that benchmark, it gives you an idea of what's going to happen in the futures. So I'm going to leave you with that. But I definitely do not use short interest as a means to indicate uh, anything having to do with a short squeeze. Bird Eye says, I read an article where they're buying short shares back with huge institute sells so you can't see them covering. Um, closing. Closing. Difference between covering and closing. Closing short interest is getting it off the books. Covering is when they've been margin called and they have to cover. Big difference. And yes, they are closing. They are closing out short interest that's in the money, not out of the money. Which is, I agree with you, Nosa, 100%. Which is why you have to take a look at the big picture. You have to look at all the numbers. You can't just look at one number and be like, oh, hey, look, there's a MOASS. 20% because, it says 20%, it's going to be a MOASS. No, it doesn't work like that. That's not how it works. You have to take a look at the big picture of all the different numbers and make all those numbers make sense. But I completely agree with what you're saying. And Bird Eye, as in regards to closing, there's still a ton of short interest still open. Even though they may be closing out positions, which you can evidently see, and there's direct evidence of those closings going on currently because short interest is dropping. There's still a lot of short interest that they can't close because it's out of the money, and they're not going to be able to close that. Infinite amount of losses. If they wanted to close it, they would have to pay insane amounts of money, and they're not going to. That's not how they operate. All right, guys, I'm going to break. I will see you guys at 8:15. Alrighty, I'm back. Eric's doing a price prediction of 17 to 20, which is the same thing he had yesterday. So I think I have everybody in. Keto, I got Cannibal, I think, gave his prediction. Yeah. I'm the only one that's left. I'm the only one left. Yes, Sammy, we're gonna go over. I already got it pulled up for later, but we're gonna go over um, the earnings report here between aftermarket open and the first rundown on all of our numbers. Does each legally reported share shorted equal 2 shares? Each legally reported share. It's a representation of, and I may be wrong on this, but it's a representation. Oops. It's a reported share that has to be eventually purchased. So somebody owns the share, but it's also a reported share that needs to either be purchased or closed, one of the two. So I wouldn't necessarily call it 2 shares, but it's placeholding of 2 different sections of where you would count that. So it is an institutional ownership, but it's also because it could be loaned to replace that failure to deliver if there's a failure to deliver, or it could be it could just be closed, in which case it's never on the books again. So it could be a representation of 2, but it's only so I wouldn't. That's why when earlier when I was doing short interest, I wasn't counting short interest in the calculations for shares that are in existence. But I did count loaned shares, right? Why? Because those have to be replaced. No dividend 2 weeks, bro. Or dividend either. I need to come up with a price prediction. Let me look at the price here real quick. Where are we going? I hope that makes sense, ABC. And I think that's correct. I think I'm correct on that. Because if you were to count short interest shares on loan, well, I guess if you were to count institutional ownership and short interest, those are almost one and the same. The short interests are one and the same. But it's not actually in existence though, right? Because those positions are just open. So they have to come from somewhere. Where is this going? We definitely broke outside of the multi-day ascending parallel channel. Don't know how much further down that's going to go. We have a support line at 18. I think I might do 1730 to 2030. Yeah. 1730 to 2030 is my prediction for the day today. how many of you guys were watching earlier this morning when the song played? Because I can't wait. I can't wait till you guys hear today's song. Oh, 2 weeks bro says, so it makes sense company with good earnings go down. Welcome to the stock market. It looks like let's just look at GME for just a second. We're still in my blue box that I've got set up from forever ago. I had suggested that we might break out of a trend here. It did break out already down below it. It's below where I'm going to delete this box because it's off. We already broke outside the wedge. So GME is up 1.36% in the morning so far. I just kind of wanted to see how they're looking. Nice little uptrend there. Alrighty, guys, we're getting close to market open here. Keto says post and pre-market means nothing. This will be green today. I thought the Q4 earnings, we'll cover it here. We'll go over it here right after market open, and I thought it was really good looking. I don't know. We'll cover. We'll go over it together. I mean, I just listened to what it was that they said. I didn't actually look at the data. I'm more of a visual person than I am an auditory person. So, listening to them talk about the earnings report versus me reading it, I'd never took the chance to do it. I figured I'd go over it with you guys today. So we're gonna go over the earnings report as soon as market open, which is gonna happen right now. So I'm gonna go ahead and shut myself off, get this market started, and we'll take a look at it right after the intro. So I'll see you guys on the other side of market open.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, remaining start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond. Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward leg now in S10.
Okay, you sound good.
Discovery Houston, negative return.
Copy, a negative return.
I'm too sexy for my love, too sexy for my love. Love's going to leave me. So sexy it hurts, and I'm too sexy for Milan, too sexy for Milan, New York and Japan. And I'm too sexy for your party, too sexy for your party, the way I'm disco dancing. I'm a model, you know what I mean, and I do my little turn on the catwalk. Yeah, on the catwalk, on the catwalk. Yeah, I do my little turn on the catwalk. tush on the catwalk. I'm too sexy for my cat, too sexy for my cat. Poor pussy cat. I'm too sexy for my love, too sexy for my love. Love's going to leave me, and I'm too sexy for this song.
Good morning, you filthy apes. Welcome to AMC and ADD, where we buy, we hold, and we screw the hedgies. Screw the hedgies! Screw them! Good morning, guys. Good morning to you. Another fine day after the earnings report that was too sexy for this market. The market can't handle this sexy Q4 report. Oh man, how many of you guys brought back memories hearing that? How many of you have not heard it before and wish that it hadn't crossed your ears? Oh man, I really thought I went too far with that song this morning when I first picked it, and then Peter C put a comment in earlier this morning. Let me see if I go back. I got to go back to it. Oh, you know what? I don't think I can see. I don't think I can see what it is that he wrote, but he said he said something about like I'm gonna have to take my like back now. Gus says bad memories. I'm telling you, Gus, it's weird to me how over time songs have different meanings. Like at first you may love it, it's the best song you've ever heard, then the next it's over too played or overplayed too much, and it's crazy. It's crazy how that works out. NJ Fishkiller says, what happens if we put in a limit sell order at 1,000? Does it help with price discovery? Algo Trading Quant is putting buy order with lower limit orders to drive price down. No, I don't believe so, Fishkiller. I don't believe it does anything. I told my wife, Bill, I said, it would be funny if I move the chair aside, turn on the video camera, and then as he's doing the whole dance on the catwalk thing, like kind of like shook my booty as I came over and sat down in the chair. It's like, no, I'm not gonna do it. I'm not gonna do it, but it would be funny though. Cannonball Broncos saying reverse into green. I mean, this is a really hard push into this Bollinger Band here, guys. You can, it's almost like it's a head fake. Okay, Cannonball Bronco. I wasn't sure if I had your price prediction or not, so let me change what you have here. 1947 to 2247. I've got. Okay, so let me give you guys the predictions, and then we'll go over the Q4 report that's too sexy for this market. I have 17.3 to 23. Eric has 17 to 20. Keto has 18.13 to 21.13. Monty 20.01 to 23.01. Cannonball has 1918 to 2218, and then 24/7 Culture, who I haven't seen before on here, put out a price prediction, and so said 1947 to 2247. So I just wrote it down just in case. Monty saying that oil is over 112 a barrel. Inflation continues to rise. Russia is invading Ukraine, but yet the Dow is up over 200 points. Pebbles saying, Casey, would you be going into the realm of OnlyFans if you didn't know? No, not a chance. Silent Streamer just tagged me. I didn't get an explanation at all, Nosa. No explanation. Nobody knows what 3 red candlesticks going up in an upwards trend is. I have not received any kind of nobody's given me an answer for that. Let me check real quick here this tweet that I got tagged in, and it may not have come through yet. Yeah, I'm not seeing anything just yet. I don't know why. On my computer, I'm sure the tweet probably is showing up on my phone right now. But for some reason on my computer, the tweets just don't come through like instantly. I'm not getting anything on my. Oh, somebody saw the Batman. Some people saw. So I got actually. I'm noticing that I had tweets. Hmm. I don't know which tweet it is. I'm looking through here and I don't know. For some reason, I have a lot of tweets on here that I didn't even see before. Let me go back. Keto said it was keto, right? Who said it? You sent a DM. Is it in regards to the 200 million orders at the end of the end of the day yesterday? If it is, then I saw that and we talked about it earlier this morning. Oh, here it is. It finally just now came through. I don't understand this. Now it's back. Let's see. So March 11th call options are showing up. Well, those seem to be pretty cheap prices for like the 28, 26, 28 range. Hmm. So just prior to the market open, they were down. I'm not an options expert. I'm trying to make heads and tails of what it is that you sent me. Hey, Silent, send me kind of like a detailed breakdown of what it is I'm looking for here because I'm not seeing. I see how they're down and then all of a sudden they're up. Yeah, send me like some kind of like detailed thing. But I kind of want to set. I got like 15 minutes or 20 minutes here to cover the report from yesterday, the Q4 report. So I want to do that real quick here. So I guess I'm thinking about putting it on the screen, but I think you guys probably would rather see price. So I'm just going to read from it. Fourth quarter summary. So these are bullet points. AMC's fourth quarter of 2021 represented its strongest quarterly results in 2 full years. Total revenues for fourth quarter grew to wow, there's no point. It's 1.171 billion compared to 162.5 million for the fourth quarter of 2020. Total revenues for fourth quarter grew. Wow. So essentially it grew by like 1.01 billion. Net loss for the fourth quarter improved to 134.4 million, including a non-cash impairment charge related to long-lived assets of 77.2 million compared to a net loss of 946.1 million for the same quarter a year ago, which included a non-cash impairment charge related to long-lived assets. Definite and indefinite lived intangible assets and goodwill of 466.1 million. Fourth quarter adjusted EBITDA, I hope I said that right, improved 486.7 million to 159.2 million compared to an adjusted EBITDA loss of 327.5 million for the fourth of 2020. So let me read that again. Net cash provided by operating activities for the fourth quarter was 46.5 million, and operating cash burn generated non-GAAP was 224.4 million. Available liquidity in cash and cash equivalents at December 31st, 2021 was approximately 1.8 billion and 1.592 billion respectively. As of December 31st, 2021, AMC had opened and was operating 593 domestic theaters and 337 international theaters. Wow. They almost have as many, I mean, they're getting really high up there in international theaters. This represents 100% and 95% of its domestic theaters and international theaters, respectively. Substantially, all the company's theaters were open for the entirety of the fourth quarter. In announcing the quarterly results, Adam Aron said, AMC's fourth quarter 2021 results represents our strongest quarter in 2 full years, with positive adjusted EBITDA of almost 160 million, operating cash generated of more than 220 million, and finishing 2021 with a record year-ending liquidity position of more than 1.8 billion. Our positive recovery glide path from global pandemic continued in earnest in the fourth quarter. While not yet where we want to be, our progress is substantial and unmistakable. The quarter offered moviegoers a more robust and appealing film slate that culminated with the exclusive theatrical release of the now third highest grossing movie of all time, Spider-Man No Way Home. Despite having been released at the height of the Omicron fears, AMC took advantage of the robust fourth quarter film slate, pent-up consumer demand, and a bold advertising campaign, among other important marketing initiatives, to attract some 60 million visitors to our theaters around the world during the fourth quarter. Now, I want to just talk about this for just a second. Let's just assume that there's 90 days in the fourth quarter. Just for a second, because I want to break this down, right? We have 4.1 million eligible voters, according to Adam Aron. So I want to break down the 60 million, right? And I'm going to divide it by 4.1 eligible, right? And let's just say that the average investor has 2.5 people. For every investor, there's 2.5 people they take to the movies. It's a very fair number, right? I mean, some people are single, some people have families. We'll just go with 2.5. So 4.1 times 2.5 gives us 36.5 million. We are not going to the movies enough. That's 36.5 million. That means you guys saw 2 movies on average. 2 movies you saw in 3 months' time, because he said 60 million people have come in. You guys aren't seeing movies enough. You need to go in and see some more movies. Legitimately, though, over those 3 months, Spider-Man, and I'm trying to think what other really good one there was during that period of time. And I'm trying to think what the other one was that I really enjoyed. I should just go back to my movies. What was the other one we saw? I know we saw 2. I'm trying to remember, but I can't remember what the other one is. That's sad when you can't remember. Oh, Ghostbusters. Ghostbusters, man, that sucks because that was actually a really good movie. September, October, November, December, right? We actually saw 3 movies. I forgot about the other one. No, 4 movies. So yeah, we saw 4 movies. We saw Venom, we saw Halloween Kills, we saw Ghostbusters, and we saw Spider-Man. So we saw 4 movies. And there's like each one of those movies, I think we probably bought tickets, like at least 5, maybe even more than 5 tickets per movie. So Y'all aren't going to the movies enough. Get out and go see a movie for crying out loud. I can't see what it is you guys are writing while I'm here. I'll minimize this so I can see what you guys are writing. Hold on a second. Let's see. One second. But yeah, I mean, the fact that they drew in 60 million, now I can see what it is you guys are writing. The fact that they drew in 60 million viewers tells me that we're not seeing movies enough. We need to go out and see more movies. If you want to support the company that you're, supporting, I mean, there is always just, I mean, that's the difficulty. That is the difficulty right now. Like, do you buy a movie ticket or do you buy a share? Because really, what it comes down to right now is those are getting to be very close or similar in price. Um, Splinter says, "I refuse to drive 2 hours to an AMC theater." I hear you, man. I hear you. It's very, very difficult though to decide. Oh, The Matrix. That we saw The Matrix too, but that had to be. Was that fourth quarter? I think that was before fourth quarter. Yeah, we'll get there, Sammy. We'll get there. Because he did announce, and he announced. Not only did he announce crypto, but he also there's three different ways that they're going to be doing crypto. But the other one, which would make them, I think, one of the first companies to do that. But the other thing is that they're talking about doing a credit card. They're talking about doing their own credit card service. So that's pretty big as well. Matrix was at Christmas. All right. Well, I guess I saw 5 movies then, or 6. I don't know, because I saw Matrix too. Let me see here. Okay, so he says that was sevenfold increase over the fourth quarter of 2020 and a 50% increase compared to the third quarter of 2021. I don't really like what he compared to, but that's okay. Aaron added our record year-end liquidity positions AMC well for continued recovery from the impact of COVID and provides AMC with financial flexibility to opportunistically grow and innovate as we seek to transform our business. To that end, during 2021 and early 2022, AMC has been adding that we expect to be nicely profitable theaters to our net. AMC has been adding what we expect will be nicely profitable theaters to our network, both in the U.S. and in international markets. Launched for 4 separate NFT programs accepted cryptocurrency for the first time and announced AMC's entry into the multi-billion-dollar retail popcorn industry. As we have heavily repeated, or have repeatedly said, with a monetary war chest that was provided to us by our shareholders in 2021, AMC is no longer on its heels as COVID case numbers are finally declining and vaccination numbers increasing, as our operating results are markedly improving, and as our health liquidity allows, AMC is playing on offense again. Aaron Aaron added, another component to financial flexibility is the opportunity to improve the company's capital structure. And in February, we did just that with a successful offering of $950 million of senior secured first lien notes to refinance high interest rate debt at lower rates while extending maturities to 2029. And we will continue to seek opportunities to strengthen our balance sheet during 2022 with a keen eye to lowering our interest expense, extending to our maturities and opportunistically deleveraging. Aaron concluded, the fourth quarter of 2021 proved once again that moviegoers want to see movies in theaters. We are quite bullish that for the full calendar of year of 2022, the industry box office could be nearly double that of 2021. With COVID impacts easing, with more and more major films on the docket for release, and with most major studios coalescing around a exclusive theatrical window of 45 days or more, bookings are very strong for The Batman, which opens this weekend, and we have movies like Top Gun, Maverick, Jurassic World Dominion, Black Panther, Wakanda Forever, and Avatar 2, and many others that will excite us all this year. We should point out, however, that the box office pacing and our results in 2022 are expected to be heavily weighted towards the second half of the year. The January and February domestic industry box office numbers are already known, While they are more than quintuple that of last year, they are nonetheless well short of pre-pandemic numbers. While no one has a perfect crystal ball, it would seem that more blockbuster activity likely will come starting in the spring and summer of 2022, continuing through the year end. So he's projecting a little bit there and saying that there's going to be, yes, I can refresh Vortex. It's going to be about 6 minutes. I'll refresh Vortex in 6 minutes, Bri. It seems to me that he's projecting that there's going to be a weak Q1, but he's basically saying that the big blockbusters are really going to start hitting the later half of this year, and that's really where the profits are going to be coming from. CTB min, max, and average are all the same whenever there's only one, usually one or less, one or less institutions reporting their cost to borrow numbers. So as the morning moves forward, you get better numbers. But we got 5 more minutes here until I do my normal check. I feel like you guys want to get straight to the other stuff. Let me see if I can find it in here. I don't think this includes a transcript of what was said, because a lot of the rest of this is just numbers on earnings. I don't think it has the forward-looking statements. Let me just check and see. That's a shame if it doesn't include it. Hmm. It doesn't talk about any of the things that they talked about in the final portions of the question and answer, and some of the announcements that were made about a lot of the things that we're talking about in here. Um, that's unfortunate. Let me see if they released another document in here, because I got just a few more minutes. Sometimes they will release the statements about what the forward-looking statements are of the company. Let's just check here. One second. Actually, it would probably be under this one. that one. Okay, here we go. All right, I'll come back to this in just a second because it is time to. So I found the documentation here. I think of all of the general development of the business and some of the future things that they've talked about, and we'll cover that here in just a minute. Right after I get done with looking at our numbers, let me just make sure it's all in here. Yeah. Oh, there's so much. I'm gonna give you guys the link to this in case you don't have it, and you can look at it if you want to. And let me refresh Fidelity, and then I'll take you guys over and we'll refresh all of our pages here. All right, taking you guys over to the other screen. Alrighty, starting on the top left-hand side, price prediction tallies. Eric won yesterday. He was the only person to get a point with his price prediction between 17 and 20. Price predictions for the day today. I have 17.3 to 23. Eric has 17 to 20 again. Keto has 18.13 to 21.13. Monty has 20.01 to 23.01, and Cannonball has 19.18 to 22.18. Moving down to short exempt volume, 72.6 was a little bit lower than I think it was the 77 from yesterday. On short exempt volume, utilization still at 100% now for day 16. We are on day 16 of 100% utilization. And the day-over-day price increase was a negative 2.86% down from the previous day, turning that back into a red indicator instead of a green indicator. Taking a look at that off exchange, 46.23 in the off exchange right now. The CBOE EDGX at 12.25. At 46% is pretty high. A lot of price discovery being hidden in the off exchange right now. Normally I would expect around 43, 44. So it's about 2% higher than usual for this time of the morning. Taking a look at Ortex. Not a whole lot of change here, so I'm not sure. You guys are probably, and that cost to borrow is still the same across both three, or all three of them. So there may only be one institution that's lending shares right now as a possibility, or they're just, I don't think they're updating Ortex as frequently as they have been. And the reason that I state that is that um, a few hours ago when I looked at borrowed change, it was at 52,000 shares borrowed. It's still at 52. It doesn't appear that anything has really changed on this page. So Ortex is just kind of being delinquent on their normal reporting, it looks like. However, they are still showing the same number as borrowed change. Estimated short share interest of the free float at 20.14. Shares on loan is still at 116, which is higher than it was yesterday. Moving to the top hand right hand side of the screen, you'll see the institutional shares at 187.941 million. Let's refresh that and see where we're at now. 187.941, still the same number. That's a little bit down from the all-time high, which we set on. Hold on a second here. I'm trying to. Come on. There we go. We set on 223 where it was 189 million. So we're down a million, 1.1, 1.2 million shares in institutional ownerships from our all-time high. Max pain for the day today is still indeed $18. So $17.50 on Monday, 18 yesterday, and 18 today. Taking a look at those options. Keto, I'll look for your update here. See if you put something in. I honestly don't look at the options for AMC as far as like purchasing. I just kind of look at what they're at. So I'm not going to reveal the information, some of the information that you said in this to me here. Hmm. I'm going to send you a message when I go to my next break, Silent. We'll talk about that in a minute. On the options here that we have showing right now, highest amount of volume on the call side is at a $20 strike price, the same as yesterday. There's currently 4.4 thousand contracts open. On the put side of things, at a $16 strike price, which is $2 down from yesterday, there is currently 5.7 thousand contracts. So there's a lot of option play going on right now in the market. These numbers are a little bit higher than I would expect to see this time in the morning. A little bit higher. But there is a $4 spread between the highest amount of volume of calls versus puts, giving us kind of like a target for like maybe a closing price of around 18 or basically max pain. I'll refresh Ortex one more time here. Still no change here. I will point out a few things here on Ortex because this is our first run through for the day-to-day. And here's our utilization here for the last 16 days, being at 100%. Here's our on loan amount starting to increase back up again. We had dropped from 118.4 down to 115.9. Now we're heading back up to 116.23. Here's our short share interest of the free float, taking a turn back up as well. And then on loan average age per day, still spiking back up. We're heading towards our all-time high for on loan average age per day was 80.39. We're at currently 77.33. So I would expect within 4 business days we'll be at a new all-time high if we continue this trend upwards. Orders by Fidelity customers. AMC is, wow. Okay. Compared to the rest of the market, AMC is third. Apparently we have a lot of volume right now. 66% buys to 34% sales is our buy to sell ratio, which is decent. Let's see if GME's made it up onto the list. Nope, no GME. GME can't come out to play when its shares are locked away. Volume is everything. If you got your shares locked up, you can't get volume. Uh-oh. Refresh. There we go. Shares borrowed in the last hour. Looks like there's 50K here. Almost 50K here, so we'll count that. We'll count 250. So 100K added to the 2.35 from earlier, so we're at 2.45 million shares borrowed for the day today. 3.9 was the value from yesterday. Kind of low numbers. 10.1 thousand contracts are in the money on the calls. 66.5 thousand contracts are out of the money on the puts. SSR trigger price is 16.49. The Nasdaq is down 0.13. The Dow Jones is up 0.67. The S&P 500 is up 0.44. The market is currently advancing over declining with 4,479 advancers to 3,001 decliners. The VIX is down 3.63. IWM is up 0.95. Tesla is down 0.35. Amazon down 1.32. Cinemark is up 0.79. Doge is down 1.05. Bitcoin is down 0.13. GME is down 1.26. Hood is down 4.89. And AMC is down 2.95. Our inflow versus outflow currently shows 3 million more in outflow than inflow, and a volume. So our volumes, I wouldn't say is relatively that high right now. Let's just check and see what kind of pace we're on here. 41 minutes. Looks like we're on pace for about 77 million shares traded for the day today. I suggested another 25 to 45 million day. So we're definitely on track for that. So if we've got a lot of volume in orders in contrast to the rest of the market, then the rest of the market's just not doing much. Let me see how, yeah. We're not having a spectacular day, but for some reason we have a lot of orders compared to the rest of the market. So it's a slow day on the market. It's either a slow day on the market or the market's not making any moves right now. It's waiting. It's waiting on something. The president did have the what is it called? State of the Union address last night, and based on it was kind of a gung ho kind of it was a pep talk. It felt like a pep talk, and so if they're trying to get the market to represent positive sentiment from that pep talk, they're certainly trying really hard to get that to be the case. Definitely no volatility in the market right now. Volatility is way down, almost 5%. Citadel will engage in crypto this year, CEO Ken Griffin says. Kenneth Griffin, the founder and CEO of Citadel Securities, says the firm is likely to move into market making for cryptocurrencies this year. Ooh. Can't wait to hear what Bitcoin people seem to think about that. Bitcoin fanboys. If you're a Bitcoin fanboy, how does that make you feel? Oh man, those webs, the webs they weave. Jay Powell is talking to Congress right now. That could be why we're seeing the market stalled out. That may be why volatility is down. It's waiting. The market's waiting to hear the final words to in order to react. Man, man, Citadel and being a market maker for cryptocurrency. That's insane. All right, let's listen in. I don't know. I feel like we should listen into what Jay Powell's saying. What do you guys think? I didn't finish all the stuff I needed to do. Let's look at the daily first. I mean, that's what it sounds like to me, Bird Eye. They need crypto to launder their money to real estate. Won't cut it when it crashes. I tend to agree. On the daily, we have more selling pressure than buying pressure with an RSI of 47.99, which is right down the middle on the RSI. On the hourly, we have equal amounts of buying and selling pressure with RSI of 43. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 41.53. And on a 5-minute interval, we have what looks to be a crossover coming here with more buying pressure than selling pressure with an RSI of 41.41. All right, let's give Jay Powell a listen to. Yeah, Sammy Boy's right. AMC has announced that they want to get into crypto. We'll get into it here in just a little bit. Let's listen to Jay Powell. Go for it. Give it a chat in the chat column. We can talk about it in chat while we're listening into that. Let me find this here. Mm, 2. Got it.
Incoming economic data and will adjust the stance of monetary policy as appropriate to manage risks that could impede the attainment of its goals. The committee's assessments will take into account a wide range of information, including labor market conditions, inflation pressures and inflation expectations, and financial and international developments. We continue to expect inflation to decline over the course of the year as supply constraints ease and demand moderates because of the waning effects of fiscal support and the removal of monetary policy accommodation. But we are attentive to the risks of potential further upward pressure on inflation expectations and inflation itself from a number of factors. We will use our policy tools as appropriate to prevent higher inflation from becoming entrenched, while promoting a sustainable expansion and a strong labor market. Our monetary policy has been adapting to the evolving economic environment, and it will continue to do so. We've phased out our net asset purchases with inflation well above 2% and a strong labor market. we expect it will be appropriate to raise the target range for the federal funds rate at our meeting later this month. The process of removing policy accommodation in current circumstances will involve both increases in the target range of the federal funds rate and reduction in the size of the Fed's balance sheet. As the FOMC noted in January, the Fed funds rate is our primary means of adjusting the stance of monetary policy. Reducing our balance sheet will commence after the process of raising interest rates has begun and will proceed in a predictable manner, primarily through adjustments to reinvestments. The near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war with sanctions, and of events yet to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. Maintaining the trust and confidence of the public is essential to our work. Last month, we finalized a comprehensive set of new ethics rules to substantially strengthen the investment restrictions on senior Federal Reserve officials. These new rules will guard against even the appearance of any conflict of interest. They are tough and best in class in government here and around the world. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you very much. I now recognize myself for 5 minutes for questions. Chair Pro Tempore Powell, as you know, the Fed is required to conduct monetary policy in a manner that fulfills its dual mandate to promote maximum employment and stable prices. But as you have explained, most of the inflation we're experiencing right now can be traced back to supply chain issues related to the pandemic, and the Fed cannot directly affect supply side conditions. These supply chain constraints seem likely to only significantly increase as Russia invades Ukraine, and the full effect of our sanctions take hold. If the Fed's tools are mostly useful in stimulating or constraining demand, how can we expect monetary policy to rein in inflation that is largely driven by supply-side factors?
Our policies really cannot, as you point out, affect supply-side conditions. Our policies affect demand. What we're facing now is, though, an elevated level of demand in the face of supply-side constraints, and it's the collision of those two things that's creating inflation. So there is an important job for us to move away from these very highly stimulative monetary policy settings to a more normal level of rates and perhaps tighter at a time when inflation is highly elevated, and that is what the committee plans to do.
So it seems clear that the Fed has limited tools to address inflation and that Congress has an important role to play. The Monetary Policy Report notes major shortages in housing supply as a factor in high prices. If Congress were to make investments to alleviate these shortages, do you think this would be helpful in addressing inflation?
Major investments in housing supply. So I think housing prices are high for a number of reasons, actually. Difficulty in getting lots, materials, difficulty in finding workers, very high demand. It's been extraordinarily high. So those are many of the features, and also low interest rates have made credit widely available. Mortgage rates are going up. That will probably begin to cool off demand. I wouldn't want to comment on congressional legislation, but I do think there's no doubt a role for Congress.
So I suppose I could conclude, without having you comment directly on fiscal policy, that you agree there are ways to manage inflation outside of monetary policy. It's not only monetary policy, that others have a role to play.
I do think that's right, but more in a sort of medium or longer term sense. I think the Fed does monetary policy, and inflation is largely a monetary phenomenon, and it's our tools that can be used to address inflation. Over time, though, of course, anything that expands the productive capacity of the United States over time would, in principle, make greater potential output and a less constraining economy.
Fed forecasters expect that inflation will subside as supply chain disruption issues are resolved. However, housing and rent prices, as you've said, account for roughly 1/3 of the consumer price index, and most economists do not expect the problem to be resolved as quickly as supply chain bottlenecks due to both the time it takes to develop housing and the lack of investment in housing that is affordable to low and moderate income families. Currently, there's a shortage of nearly 7 million rental homes that are affordable and available to America's lowest income renters, and a shortage of more than 5 million homes for potential home buyers. In my district, there's a shortage of more than 34,000 rental homes that are affordable and available to the lowest income families, while the state of California has a shortage of more than 962,000 affordable rental homes. If Congress does not make the investments to increase supply and access to the affordable homes in this country, how concerned are you that the Fed will not be able to contain inflation?
Well, you're right that housing inflation is a significant part of the CPI. We also look more prominently at personal consumption, PCE, which is a different measure, and it's something less than that. And unlike these temporary supply-side constraints that we see, housing inflation really is much more of an indicator of the tightness of the economy rather than supply-side problems. So it's something we watch carefully, along with wages, frankly, and it is a major contributor to inflation. As I mentioned, higher interest rates housing is a very interest-sensitive sector, and higher interest rates, really interest rates that move back toward a more normal level, should act to cool off the housing market over time.
Thank you. The gentleman from North Carolina, Mr. McHenry, who is the ranking member of the committee, is now recognized for 5 minutes.
Well, thank you, Madam Chair. Chairman Powell, thank you for your leadership in tumultuous times, and this is certainly interesting times internationally, challenge times internationally. Everyone else on the Open Market Committee, it seems, has opined about the March meeting. Everyone, whether it's a tweet or an interview or anything else. What are your thoughts going into the March meeting?
The March meeting. Okay, so here's how I'm thinking about the March meeting. And I guess I would start, of course, with the U.S. economy, which is very strong, the labor market extremely tight, and inflation running well above target. The way we think about our work is we develop working plans for making adjustments to monetary policy over the course of the coming months, and then we are flexible as plans meet the real world. So we're never on autopilot, obviously, and at a time like this, what we aim to do is lay out our principles, and then with whatever clarity we do have, and then proceed to implement those policies carefully and nimbly. So coming into this meeting, let's say before the Ukraine invasion, the committee was set to raise our policy rate, the first of what was to be a series of raises expected for this year. Every meeting was live. Decisions would be based on incoming data and the evolving outlook. I also expected we'd make great progress on our plan to begin to shrink the balance sheet. And so the question now really is how the invasion of Ukraine, the ongoing war, the response from nations around the world, including sanctions, may have changed that expectation. And so it's too soon to say for sure, but for now, I would say that we will proceed carefully along the lines of that plan. The thing is, the economic effects of these events are highly uncertain. So far, we've seen energy prices move up further, and those increases will move through the economy and push up headline inflation, and also they're going to weigh on spending. We're seeing effects on other commodities, and perhaps from declining risk sentiment and weaker growth abroad. The thing is, we can't know how large or persistent those effects will be. That simply depends on events to come. So this is where that leaves me. I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike. We're also going to write down our new summary of economic projection, individual forecasts, which will show each participant's views of the path forward. in the economy and with rates. I also expect that at this meeting, we'll make good progress toward an agreement on a plan to shrink the balance sheet. We will not finalize that plan at this meeting. We'll do that when we think the time is right at a coming meeting. The bottom line is that we will proceed, but we will proceed carefully as we learn more about the implications of the Ukraine war for the economy. We use our tools to support financial stability and macroeconomic stability. We're going to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain moment. So that's how I would think about it.
Very specific. Now, you mentioned 25 basis points. From all the analysis about what the Fed will do over the course of the next year, is 25 basis points the floor, the ceiling? Is it the speed limit? Is that the max you think the Fed could take on? How do you think of that?
So here's how I think about that. We have an expectation, those of us on the committee have an expectation that inflation will peak and begin to come down this year. And to the extent inflation comes in higher or is more persistently high than that, then we would be prepared to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings.
Now, you mentioned the balance sheet, a plan for the balance sheet, and that is to come. But what I'm hearing clearly from you is that the Fed is very interested in financial stability given what's happening, and you're willing to make quick decisions on a question of liquidity, on a question of market stability, those important works that you've focused on as Fed chair. And so it's actually substantial news for the House to be the first rather than the Senate to break news. So thank you for your forthcoming, being so forthright about your views on this. And with that, Madam Chair, I yield back.
Thank you. The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Madam Chair, and thank you for ranking member for holding this hearing. Chairman Powell, thank you very much for being with us here once again. As we look at the unprovoked criminal Russian invasion of Ukraine, one of the most notable national security responses has been the president's recent announcement to cut off much of the Russian financial sector from SWIFT financial services. Our EU partners have also joined us and excluded 7 Russian banks from SWIFT. Chairman Powell, what practical effect would this have on Russia, its economy, its financial sector, and its people?
So thank you. I should point out that the Fed does not impose sanctions on other countries, that we, in this process of developing sanctions, we are not a principal. That's really a job for the administration, particularly the Treasury Department. So we provide technical background support and things like that, but I think questions about sanctions and their effects generally would be more for the administration and the Treasury Secretary. I think you can see, I will just add, though, that the effects of the sanctions so far appear, for now, to have been significant.
Yeah, I mean, we saw what happened to the ruble. We saw what happened to the market. The market's still closed. Is a way around it for them cryptocurrency? Could you talk a little bit about that? I know it's a little bit out of your bailiwick, but as you said, it's an interesting moment in time. You know, we haven't had to face this since really World War II, and even all the comments that you made about inflation and watching the market, so much of it is tied to obviously what the Russians are doing with respect to their unwarranted and criminal act there in Ukraine.
So I don't have any private information on the extent to which that is happening, but that is something you read about and hear about. And I just think it underscores the need really for congressional action on digital finance, including cryptocurrencies. We have this burgeoning industry which has many parts to it, and there isn't in place the kind of regulatory framework that needs to be there. It was probably no different with railroads or telephones or the internet, and ultimately what's needed is a framework, and in particular ways to prevent these unbacked cryptocurrencies from serving as a vehicle for terrorist finance and just general criminal behavior, tax avoidance and the like. I guess that's what I would say there. I don't really know the extent to which it's happening, although you do hear that and read it in the paper.
Seems like an outform since we did go down this road. Could you comment a little bit about then the central bank digital currency? It seems like that would be something that would be helpful in situations like this.
Yes, so we issued a paper after much thought and many drafts. We issued a paper, was it late last year? I guess it was late last year, seeking public comment on the costs and benefits of a potential central bank digital currency issued by the Federal Reserve here in the United States, digital dollars. And we await, I think we gave an extended comment period, and we very much look forward to reading those comments. This will be something that we invest a fair amount of time and expertise and hiring people and things like that to try to get it right, but also to understand whether the benefits actually outweigh the costs, which I think is an unanswered question both here and around the world. Nonetheless, it's our obligation to move vigorously to understand the answers to that question so that we can deploy a central bank digital currency if it's appropriate. So would it, in principle, it depends on why people are using unbacked digital currencies. If they're using them to evade, visibility and evade the law, then for us just to have a law-abiding CBDC won't change that. They'll still be able to use those currencies for that matter. The existing digital currencies that again are not backed are really vehicles for speculation. They're not used in payments. They're not a store of value. They're speculation like gold. That's what they're used for. Whereas, potentially a U.S. CBDC would have a wider view. I do want to stress we have not decided to do it, but we do understand our obligation is to really get to the bottom and understand both the technical and the policy issues that need to be answered.
Thank you, and I know my time's about up. I'd just say from your lips to God's ears, I hope that the inflation does peak this year and does come down because people are hurting. And thank you very much again for your steady stewardship.
Thank you very much.
We appreciate it.
Thank you.
The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. Welcome, Chair Powell. It's good to see you in the chair. We appreciate your time and service. Chair Powell, since the last FOMC meeting in January, the global economy has become markedly more complex. Russia's unprovoked and unwarranted invasion of Ukraine has led to a very steep increase in the price of energy. As of this morning, when I checked, a barrel of crude oil was priced at $112 per barrel. And this steep increase in the price of energy risk pushing U.S. inflation potentially even higher. How does, and you've touched on it a little bit, but how does the war in Ukraine affect your thinking as you prepare for the next FOMC meeting?
So I think the first thing, again, to say is that the ultimate economic effects of the war and all of the sanctions and events yet to come are just very highly uncertain, and we need to understand that. And so, as I mentioned, I think it's appropriate for us to move ahead. Inflation is high. The committee is too high, and the committee is committed to using our tools to bring it back down to levels of price stability, which is to say 2% inflation. So, but I would also say that given the current situation, we need to move carefully. And we will, and we'll be nimble. We'll be looking at the situation as it evolves, and again, we will use our tools to add to financial stability, not to create uncertainty.
So at this point in time, you don't think that it significantly alters your expectations for the rate increases that you've discussed this year?
I don't think that's knowable yet. I mean, so we've run, what we like to do is run alternative scenarios, and we've done some of that, as you would expect, and it's easy to find cases where it would affect, but we don't know that yet. We honestly don't, and we'll see.
Thank you. Chair Powell, could you explain the role of the Federal Reserve in implementing U.S. sanctions on Russia? How you're working with OFAC, how this actually is implemented?
Right, so sanctions are really designed by the administration. They're part of what the elected government does. We provide technical support. We implement those sanctions, or we make sure that the banks obey them, that we supervise and regulate. That's one thing that we do. We also consult on, we have knowledge about financial markets and financial institutions, so we're providing technical support, but we're not the decision makers on those things. And honestly, these are decisions that are made at the level of the government, not at the level of the elected government, not at the level of the Fed.
And I know things are happening quickly and in real time here, but what actions has the Fed taken to date since the invasion of Ukraine?
Well, I'd say, first of all, since late last year, we've been on very high alert for cyber attacks. We haven't seen any notable incidents about that yet. We consult. We're making sure that the banks we regulate and supervise are also on high alert. We communicate with the reserve banks, where there's a lot of expertise in these areas, and other parts of the government. So that's one thing that we've done. We're, as I mentioned, we are in very close contact with the Treasury Department, as you would expect, between every central bank and every finance ministry around the world. But again, we're not the ones who design the sanctions.
Right. Well, cybersecurity is certainly, this committee is, and especially at the Fed, is a top priority. I'm glad that you're watching it closely. Chair Powell, does our U.S. financial system have the necessary capital and liquidity to handle any economic fallout from this war? What kind of data will we be seeing?
I mean, the evidence to me strongly suggests that the answer to that is yes. We just went through a rather enormous shock with the pandemic and the near closure of the global economy, and U.S. banks' capital levels are at multi-decade highs, liquidity levels the same. It's hard for me to look at that and say that a lack of capital is a threat at this point. There are certainly issues. Cyber for private financial institutions is a huge issue, and one that they spend a great deal of time on, as do we.
In 2015, the Obama administration blocked the development of the Keystone XL pipeline, a decision reversed by the Trump administration, and President Biden canceled the permits, again, depriving the U.S. of over 800,000 barrels of oil a day. Wouldn't expanding the supply of oil by 800,000 barrels a day reduce energy inflation and lower prices at the gas pump?
We're not responsible for energy policy. That's a matter for Congress and the administration. Of course, the laws of supply and demand.
He just threw it back on him.
Laws of supply and demand do work. I've used my time, and I yield back.
Gentleman from Guam, Mr. San Nicolas, is now recognized for 5 minutes.
Thank you so much, Madam Chair. Good morning, Chair Powell. And I'd like to first recognize one of my senators all the way from Guam, Senator James Moylan. Thank you so much for making time to join us here today, Senator. Mr. Chairman, over the course of the uptick of inflation in the last year, you testified before the committee on multiple occasions that the Fed believed that the inflation that the country was experiencing was transitory. And since that time, especially today, there's a seeming change in that tenor. Could you elaborate more on that?
Sure, I'd be glad to. So I think very widely among macroeconomists and other central banks around the world, we looked at it as akin to an energy shock and a supply side shock. And the textbook on monetary policy would have you look through that, because a supply shock comes and goes, and by the time monetary policy is having its effect, which happens with long and variable lags, we think, the supply shock is already gone. So we looked at it that way, and I think we expected to get relief, particularly going into last fall, I would say. We expected when schools reopened, vaccinations, raised, kids back in school. We expected supply of labor to come in, that kind of thing. And it didn't happen. But it didn't happen because the supply side constraints didn't ease. They didn't ease. So it's not like, as a practical matter, what was wrong was not the theory. It was just, in reality, the supply side constraints have been much, much more durable and persistent than we had expected. So we knew that we could be wrong, and I think I always thought we could pivot pretty quickly and catch up. And we did pivot when we started to pivot in the middle of last year, and then pivoted hard at the end of the year. But in the meantime, the economy was really healing incredibly quickly over the second half of last year. You know, record job growth and record decline in unemployment, record tightening in the labor market. So, you know, we know that what our job is now, which is to move away from these highly accommodative settings to more appropriate settings, given the very hot nature of the labor market and the level of inflation.
There's chatter, Mr. Chairman, public chatter, that the intensity of the inflation that we're dealing with today is a reflection of the Fed not taking policy action soon enough, not taking enough policy action. And there's chatter, public chatter, that causes the Fed's credibility to come into question as to whether or not it is acting responsibly and appropriately with the data sets that are coming in. And I bring this up, Mr. Chairman, because we have a duty to the American people to be able to raise these questions as pointed as they are, and to give individuals such as yourself an opportunity to really speak to the credibility question that's really out there in the community. If you could elaborate further on that.
Sure. It's for others to judge many of the things you mentioned, and we understand that. But so we, starting in December, at our December meeting, we began talking about significantly more rate increases. The market took us very much at our word, and as this year has gone on, the market has you know, so market participants do appear to be reacting, you know, what I would call as appropriately to our assessment, our ongoing assessment and reassessment of what's appropriate. And you know, I'll just assure you and everyone that we are committed to achieving price stability. We will use our tools to achieve price stability. Really, that is an essential bedrock element of everything else we want to achieve in the economy, including a strong labor market.
When we faced the financial crisis in 2008, a lot of lessons were learned about the need for the Fed to be more responsive to the liquidity traps that could take us by surprise. Given the circumstances we're dealing with today and the frustrations that the American people are facing, can you share with us any lessons that the Fed has learned with respect to its responsiveness to the inflation that we've been dealing with over the past 12 to 18 months and the intense inflation that we're dealing with today?
So the inflation that we're experiencing is just nothing like anything we've experienced in decades. It's higher, of course, much higher than anything we've seen since I was much younger. But not only that, it's different. You know, it's coming from the goods sector. The goods sector has been a source of disinflation for a quarter of a century because so many goods, so many manufactured goods have been
But just specifically, Mr. Chairman, reclaiming my time, what specific lessons has the Fed learned from the outcome that we're dealing with today?
Well, I mean, we're still living through it. So the main focus we have is not on doing a retrospective. It's on conducting policy appropriately to return us to price stability while also sustaining the expansion.
Gentleman's time has expired. The gentleman from Georgia, Mr. Laudermilk, is now recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell, thank you for being here, and congratulations on your nomination to continue your job for a second term. I think it's well-deserved. Before I get to my questions, though, I want to hold up something here. This is a Ukrainian dollar. It's a hryvnia. I kept some of these when I was in Ukraine several years ago doing some ministry work, and I think it's interesting to think that what happens in the next few days may determine whether this is another defunct piece of currency and the nation returns to a ruble, or will this maintain some of its value? But as you look at it, you can see it's a fraction, physically a fraction the size of the US dollar. It takes about 30 of these hryvnias to match a US dollar, but when you look at values, our dollar has decreased in value, as you have mentioned, due to inflation. Now, a year ago when you testified before this committee, I asked what your outlook was for the economy, and you said you expected economic growth to be strong for the rest of 2021. But at that time, I warned that the $2 trillion stimulus bill that was making its way through Congress at that time was unnecessary and far too big, given the economy was already recovering. Lo and behold, these predictions came true. In your opening statement, you mentioned that you didn't expect inflation to continue at the rate it is right now, but I also recall throughout 2021, we heard that inflation was slight, it was going to be temporary. but I also understand that that prediction probably didn't include the actions and the roles that Congress had, as you had said. Now, according to a report from the Federal Reserve Bank of San Francisco, because the American Rescue Plan was so extremely large and was passed when the economy was already recovering, this was a significant contributing factor to inflation. Do you agree with that report from San Francisco's bank that our reckless spending is a contributing factor to our inflation?
I wouldn't like to comment on any particular law, but I'll say this. All of the things that we did after the pandemic were we turned our dials as hard as we could, so did you, with the CARES Act, and the economy did benefit from that. We have the strongest economy in the world now. But part of that, no doubt part of what we did and what Congress did without naming any particular laws is also part of the reason why inflation is high now.
Right. So there are multiple contributing factors to that, being reckless spending, which devalues our dollar, is one of those. And what we heard last night was that there is not going to be a change in the direction this Congress is going or the White House. It sounds like we're just going to repeat the same mistakes we made in 2021. Now, I know that you have the tools of adjusting the interest rate. You mentioned increasing 25 base points, and you mentioned that it may be necessary to go higher. Understand that. Do you still think that inflation will be temporary? And I believe that you said it would be short-lived going forward because of resolving our supply chain issues. But since there are other contributing factors to that, are you anticipating that Congress or the administration will undo some of the failed policies, such as the spending policies and the suppressing of America's energy supply, which has been a significant contributing factor? Let me rephrase that. If Congress and the White House does not change the policies of 2021 and continues down that same path, do you still believe that inflation will stabilize? Price stabilization will come this year?
Well, first, we've had this expectation, as you all know, for more than a year, and it hasn't actually come true. So we're humble about the fact that we can't really call with any confidence the turn, but it does seem that this year we'll be withdrawing policy accommodation. Actually, a lot of the fiscal policy spending has happened now, and so the impetus to growth will be declining and, in fact, negative from fiscal policy as it stands now. And those are things, and just the natural improvement of supply chains and labor supply and things like that. Those are the things we're looking to for relief on inflation, hoping for. Very difficult to say when they'll happen, and our job is to achieve price stability one way or the other.
Okay. I see I'm running out of time. I've got several other questions, but I'll submit those for the record. Now yield back, Madam Chair.
Thank you. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member, for this hearing, and thank you to Chair Pro Tempore Powell for joining us. It's been a challenging year. Rising prices at the gas pump and the supermarket cause real distress to working class families like my neighbors in Chicagoland, and improvements in employment and wages are real, but not nearly enough. My constituents saw a decade of stagnation after the last recession. Working class Latinos and immigrants like my neighbors are always hard hit. We simply can't afford that again. Chair Powell, you've said that inflation has been driven by bottlenecks in the supply chain. And last night, President Biden highlighted their role in corporate concentration and price increases. I'll note that CEOs from Kimberly-Clark to Tyson Foods have bragged to investors about their power to raise prices without facing competition. And last night, President Biden said, and I quote, "Lower your costs, not your wages." And my constituents were glad to hear that. So, Chairman, can you explain how raising interest rates will lower prices for diapers or chicken? Last time it was because my neighbors lost their job jobs and couldn't find diapers or chicken. So is that the idea?
Well, the idea is that right now, the federal funds rate is still set close to zero, and that is a very stimulative level. I think it's 8 basis points today. That is not an appropriate level, we think, going forward. We think it's appropriate that we engage in a series of rate increases over the course of this year and also let our balance sheet shrink. And so what will happen then over time is demand will moderate as interest rates get into the economy over time, and these annual price increases in everything where prices are going up will moderate as well. That is how it has always worked with interest rates. We don't do competition policy, so I can't really comment on that part of it. But I will say that that's how we think about inflation, and that's how we use our tools to get inflation under control.
Changing gears, we discussed corporate concentration, and last July, the president issued an executive order on competition that encouraged the Fed and other regulators to increase scrutiny of bank mergers. It's been a long time since regulators blocked a bank merger, even an acquisition by a globally systemically important bank, or GSIB, in 2020. Chairman Powell, do you think it's appropriate to issue a moratorium on pending mergers while the Fed updates its framework for their review?
Well, I think we have a statute that Congress has passed that gives us the rules for evaluating potential acquisitions and mergers by banks. I think we have a widely developed framework for that work, and we're continuing to implement that. I mean, any changes that would come would either come through legislation or through new personnel at the Fed, neither of which we have right now.
As we learned from Wells Fargo, frontline bank workers are an important resource for regulators. They see firsthand how banks implement or ignore internal controls, and they can identify problems as they develop. Incorporating frontline workers' voices in our banking regulatory system would improve the information we have and diversify the voices that get heard. Chairman Powell, will the Fed commit to adding bank workers to your various advisory councils? Why or why not?
Very interesting question. We do have quite a diverse group of people on our various advisory councils, including people who are representatives of workers. I don't know that it's, we don't really, I don't know that we have ones that work councils, outside councils that advise us on bank supervision per se, but we do always seek out in all of our, in our reserve bank boards and also the advisory councils that we do have representation from labor and also from people who live and work in and represent the interests of, pardon me, low and moderate income communities.
Thank you. Appreciate it if you would consider that. And Madam Chair, I yield back.
Thank you. The gentleman from Tennessee, Mr. Kostop, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chair Powell, for attending this morning. If you can, a lot of times we look for historical references when we try to reference an event, a current event. A number of people, a number of pundits, when they look at inflation today, they reference it back historically to the late 70s and the early 1980s. From your perspective, is that the proper historical reference to what we're experiencing today as it relates to inflation?
That's the proper historical reference for what we're what we're trying not to replicate. So we look back. Obviously, all of us have looked at carefully at the history of post-World War II inflation and business cycles and all that kind of thing. One of the things that's different now is that central banks, including the Fed, are very squarely take responsibility for inflation. That was actually not the case in the 1970s. There was a school of thought that really there were certain things that an independent agency just couldn't do because it was too hard and Congress should do it. So now I think central banks around the world have an inflation target. They have transparency so that they can be held to account for it. You know, we're not waiting. We are using our tools now to, and that's really different than it was in the 1970s. So, also, inflation expectations have been anchored for a long time. They really weren't then. They were allowed to become unanchored without much of a response. That would not happen in today's world and will not happen.
A few weeks ago when the CPI number came out, I was on my way to a breakfast meeting in Jackson, Tennessee, where I represented one of my constituents and I, when we were talking about the new CPI number, he said, I don't care what the number is, because I know that I'm paying 50% more in gas than I did 12 and 18 months ago. I know I'm paying 20 to 25% more in grocery prices than I did a year ago. I know what the price of a new car and a used car is. If you were me, if you were a member of Congress, what would you tell your constituents about the rising cost, the expensive cost to just live today?
Inflation is too high. We understand that, and you know, we're working on it. It's going to take some time, but we're going to get it back under control. By the way, we're seeing this everywhere in the world. We're seeing it more in the United States because our economy is stronger, but we're seeing it everywhere in the world.
Let me, if I can, follow up on a few questions that some of my colleagues asked about. Ranking Member McHenry asked you about the next meeting and your plans for the next Fed meeting, and I think you eloquently laid it out. But you also talked about the situation that's developed in Russia and Ukraine. My inference from your answer is that if Russia had not invaded Ukraine, that the Fed would be more aggressive as it relates to the balance sheet and to rate hikes. Is that a proper inference?
No, I think that remains to be seen. As I said, we are moving ahead at this meeting. It would be my expectation in 2 weeks with a rate increase, and we're going to make progress on agreeing on a plan at this meeting to shrink the balance sheet, and I'm confident we will. The question of when we implement that plan is not answered yet, so I don't think that's clear at this point. It's certainly something that we can't answer now.
Mr. Garcia referenced the President's State of the Union remarks last night. The President, when he talked about addressing inflation, said that we need to control cost. Did you hear him say that?
I did not. I was too busy getting ready for this hearing. I did not watch.
I won't tell the President.
I probably just
when the President said he wants to control cost, or that businesses should control cost to address inflation, would you have any idea what he's talking about?
I really can't comment.
Fair enough. In follow-up to my questions from Congresswoman Wagner, she asked you about cyber. I know pre-pandemic, pre-invasion, one thing that you talked about that kept you up at night was a cyber attack. If Russia were to retaliate against the United States in some form of a cyber attack, what degree of confidence do you have in our nation's banks to thwart a cyber attack from Russia?
Great question.
What I can tell you is that everything that we can do to protect ourselves against cyber, we're doing it. You know, we're doing it. The private
well, it's kind of
financial institutions are doing it. They have been for some time. So it's very hard to say what's possible to happen, but we're certainly on high alert, and we will continue to be.
Thank you very much. The gentleman's time has expired. The gentlewoman from New York, Mrs. Maloney, is also the chair of the House Committee on Oversight and Reform.
That's the question you should have asked.
Is now recognized for 5 minutes.
Put it up, please. Thank you.
Oh.
Thank you very much, Chair Lady Waters, for your leadership in calling this hearing. Mr. Powell, first I want to say that at a time when we are still recovering economically from the COVID pandemic and we're facing challenges at home and now in Ukraine, I think and I feel deeply that the Fed should not be subjected to political stunts in the Senate with boycotts by the Republicans, and the Senate should consider the pending Fed board nominations as soon as possible. The Fed has an important job to do, and President Biden has put forward qualified nominees, and we need to get this done.
Fix your mic.
So that's just my main point. With that said, as you and I have discussed in the past, the economic recovery has not been even, and we still have a ways to go to ensure our economy works for everyone. Just as one example, the Black unemployment rate remains at nearly 7%, which is more than double the white unemployment rate. And later today, the Select Subcommittee on Corona Crisis is having a hearing where we will be looking at the depth of the pandemic's impacts on child care providers and workers and the results that has on our families and our economies. So I want to ask you about the monetary policy report the Fed released on Friday. The Fed notes that the labor force participation rate remains well below estimates of its longer run trend as a result of retirement and people out of the labor force and engaged in caregiving activities. From both a macro perspective and a micro perspective, what does this drop in labor force participation mean for the U.S. economy, and what does it mean for those workers who leave the workforce to care for their children or family members?
Well, having a lower labor force participation rate now, it's about a little more than a percentage point lower than it was. It reflects a lot of retirements. And, you know, what it means is that our labor force is smaller. That has consequences, including it's contributing to the labor shortage that we're seeing across industries all across the country. If we had a few more million people working, then we wouldn't be feeling that quite so much. It also means the potential output of the country is lower. Many of the people who are not in the labor force are retirees who have made a choice, but some of them are still people who want to come back but perhaps can't because of childcare activities or fear of COVID or other factors. In any case, it's been the decline in labor force participation that we've seen has been much larger than that of other comparable nations. And it was not something we expected, and it's certainly something that's now contributing to wage inflation and actual inflation and to the labor shortage that we're currently seeing.
All right, I'm going to pause right there, and we can come back to it. I'm going to go ahead and go through the numbers here. Let me update. Fidelity. We'll go through our numbers. We're a little bit late here. You guys are asking a lot of questions. We've got a lot to cover today, guys. We'll get to it. I've got what Adam Aaron talked about with the cryptocurrency all queued up and ready to go. We'll talk about that as soon as he's done talking. Man, that was rough to listen to with her microphone. My gosh. Taking you guys to the other page, let's just wrap through these numbers real quick here. Off exchange 46.23 and 12.25 an hour ago. It is now currently at 53 and 13.545. The CBOE EDGX is a full percentage point higher than the 30-day average. The off exchange normally around this time is only about 48, 49. So well higher than what we would normally see in the off exchange, and definitely above the 30-day average by about 1.5%. So definitely a lot of price discovery being hidden today through the off exchange. Moving down to Ortex. Let's see if Ortex is finally updating. Nope. Those are the exact same numbers from 2 hours ago. No changes in Ortex. Ortex is being a poo-poo head. trying to keep it PC here for you guys. Ortex is being a poo-poo head. Moving to the options. You're a poo-poo head. Here, we get the kids. This is what the kids think about Ortex. Oh, wait, that would have been really loud for you guys. I'm sorry. Sorry if that was really, really loud. Oh, you didn't hear it. It didn't come through. Oh, whew. I'm glad I didn't blast you guys. Here's what the kids think about it. I just realized that my Stream Deck's turned off. Weird. Okay, moving on. Options, let's update those. Highest amount of call options at a $20 strike price. Let's see, we've got 7.8 thousand contracts. An hour ago, it was 4.4. On the put side of things, whoa, 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 way high. Huge spike in put options at $16. It went from 5.7 an hour ago up to 14.7. Huge, huge, huge amounts of put options opened up at $16. Prices only dropped down to 17.31. So there's definitely a very strong push here. That's a 2-to-1 ratio. Yeah, 2-to-1 ratio. No, it's not. It's a little less than 2-to-1 ratio on call versus puts, but it's almost a 2-to-1 ratio. So I think the market tends to think that it's going to make it down to 16 and then head back, head back up possibly to 18 by the end of the day. 16, what was it? We'll take a look here in just a second what SSR trip's at. Let me move a few pages. Trips at 1649. Orders by Fidelity customers. AMC was in third earlier. We have now moved down to fifth. We have a very strong 70% buy to 30% sell ratio. The rest of the market is just idling out. We don't have large volume today. The rest of the market is just not moving. It's the only reason that we're in the top 10. GME is not on the top 30 list. GME's shares, when they're locked away, Jimmy can't come out to play. Shares available to borrow. There's another 50K there and just a slight amount out of the ETFs, but I'm not going to count those. I only do 50,000 or more. So we're at 2.5 million shares having been borrowed for the day today, compared to the 3.9 yet from yesterday and the average of about 4.5. So a little bit low on the borrow side. Fees did increase earlier this morning, guys, from 0.7 to 0.8. Currently, there is 10.1 thousand contracts in the money on the calls and 66.5 thousand contracts out of the money on the puts. 1649 again is SSR trigger. Hey, what's going on, buddy? My dog, I think he wants to go outside. Let's see here. Refreshing the page here, which is taking incredibly forever. Uh-oh. I did not turn off items in the household today. Let me do that really quickly in case that is affecting. There we go. Everything's off now. NASDAQ is up 1.08. ETFs, the Dow Jones ETFs are up 1.7. S&P 500 is up 1.57. Let's see, we have more advancers than decliners with 4,841 advancers to 2,649 decliners. VIX is down 3.48. IWM is up 1.81. Tesla is down 1.17. Amazon is down, or sorry, up 0.39. Cinemark is up 1.43. Doge is down 0.59. Bitcoin is down 0.3. GME is down 1.03. Hood is down 4.67. AMC is down 4.25. Inflow versus outflow, we have 5 million more in outflow than we do in inflow. And we've traded 15 million shares in the last 103 minutes, giving us an average pace volume of 57 million shares for the day. I said somewhere between 25 and 45, and it's looking like it's going to drop down inside that range easily. On the daily, almost a crossover with more selling pressure than buying pressure, and an RSI of 46.38. On the hourly, more selling pressure than buying pressure with an RSI of 37.86. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 36.41. And on a 5-minute interval, we have more buying pressure than selling pressure with an RSI of 36.19. With that, we'll get back to the Powell questions and answers. The red dotted line down here is the SSR tripping point. Since we are at that point to where I need to start taking a look at synthetic price failures, let me pull that screen up really quickly and put in the information real fast. So let's see, 1934 was our last high. So 19.5% down from that. Let me just verify my information. 1934. Nope, we had higher the high than that. 1945, 1943. All right, so from 1379, we went up to 1943, which is a 40.9% increase in price. So we're on a downtrend right now, so we need to start tracking new lows. Let me figure out what those numbers are for potential turnaround points. Oops, wrong one. $15.64 would be a potential turnaround point, and I'm gonna have to move some of my lines. $15.64. The 20% mark would be $15.54. And 15.25 would be the paper hands number. So normally, what we've seen in the past is we've seen the, these numbers aren't making sense to me. Those numbers are, let me just verify these numbers real quick. They're not making sense. $15.64 is correct. Those numbers are right. So this would be a 19.5. The blue line represents 19.5% down from our last high of 1943. The white line represents a 20% drop from 1943, and 21.5% drop would be 15.25. Those would be the points. Typically speaking, what they would usually do, this is just kind of something we see them do, is they'll knock the price down to the point to where they get this SSR to match up really close to either the 20 or the 19.5%. It'll fall somewhere between the blue and the red line, basically. And then what you'll see is they'll see them drive down the price to that, and they'll try to get it to stick. That's a synthetic price failure. So that may not be today, because obviously SSR is not down there. So they may try to drive the price down to where like say for example, they close the price today at around, let's just say $17. Let's say they close it at 17 minus 1.7. That would be put them at 15.3, which would be right down here, right in that number. If they close us at 1750, then that would be minus 1.75, and that would put us at 1575, and that would be a little bit higher. So if I had to guess, if I just had to throw a random guess out there, I would say that they're going to close us somewhere between 17 and 1750 today, or at least attempt to try and get that SSR trigger point right in the turnaround sweet section. Now, why do this? A lot of you who have been here for a while, you've heard me talk about synthetic price failures. It's a 20% drop over a very short period of time, usually 24 to 48 hours, where they're trying to get people to elicit share sells, right? They want to try and get people to sell off. So they're going to try and drive the price down, scare investors, and then typically they let it release. Now, if they find paper hands along the way, then they'll drop it down further, and they'll continue to drop so long as they continue to as soon as it stops being profitable to continue to drop price, then they'll stop, and that's when you'll see the price turn back around. Let's take a look at that NOSA. Let me see here. Let's pull up the All right, let me see here what I've got. And I forgot to put my predictions in there. Let's see. This was yesterday's numbers or models. Here's today's. I don't like that one. Here's today's models. There we go. The suggested model for today, I believe that there was an actual suggestion that was made on this one. They're suggesting a possible number 1, green. So this one right here. And this was made earlier this morning, this prediction at 7:03 a.m. So this is the prediction. It's kind of looking like that might actually be really close, but not quite. I'd almost say that this one's kind of more. Let's see, this one looks pretty close. A little bit of a hump here that's not found on these two. Yeah, I'd say that it's probably one of these two, circled in red. Not sure which one. We'll have to look for the little head and shoulders, because this one, obviously price comes up here and comes straight back down, so it's not quite flat across the top like you have. But we might be looking for this like head and shoulder pattern coming up here. And if we see that, like if this is the first shoulder of it right here, then we know that we're on that first image. If not, and it's the reverse image to that pattern, then we have a little bit more of a hump in here that kind of formed. And so this might be the projected path So we'll see what happens here. We're either looking for that head and shoulders or we're looking for a sharp increase in price while I'm on break, which does tend to have happened. I'm going to turn, since it is my break time, I'm going to turn on Powell. Let him run for a little bit here. I know you guys just love hearing Powell talk. But let's get him back up here. We're not screwed, David. This is just more of the same usual stuff. Gary, if it hits the SPF, typically speaking, if they haven't found a whole lot of paper hands in here, then they'll let the price run back up and then you have new highs. That's what we typically find to have happen. Bird Eye says, look at volume. Well, I'm gonna actually add to what I said. They'll let it come down, they'll let it run back up. Then at that point, we would be looking for a 15% increase in price from the turnaround point. But before it gets there, usually they'll try to run it back down like 2 or 3 times to test for multiple paper hands, which would be something that we would probably see tomorrow. So let me get Powell back on here, and I'm just gonna let you guys. I'm gonna throw that out here. Just saying, if you guys freedom, I heavily believe in freedom of speech, so I let people say what they want to say. I have really good moderators on this channel who are respectful of other people's right to speak and say what it is that they want to say. If you don't want to hear what it is some people are saying in the chat room, you have the ability to silence those people so you don't have to read what it is that they're saying. So I'm just throwing it out there so that you guys know that you have that option. You don't have to listen to people that you don't want to hear. I'm not going to silence them. I personally, I'm a huge proponent of freedom of speech and the right for people to say what it is that they feel. So, and I respect my moderators' decisions to choose who they silence and who they don't. Freedom of speech is more powerful than oil prices. The pen is mightier than the sword. All right, let me get Powell back up here, and I'm gonna take my break. I'll see you guys after I get off. And if he gets done talking, I'll put some music on.
Oh, thank you. It's been announced as a result of the Ukraine war and other disagreements that Russia and China are now moving to trade completely in their currency, no longer using the dollar. And Pakistan has flown in to meet with Russia. There's some talk that they may be part of it. What effect would that have on the U.S. economy if China and Russia no longer use the dollar in certain block trades around the world and with each other? What effect, if any, would it have on our economy?
Well, we do benefit from being the reserve currency for the main reserve currency for the world, and that really is because we have open capital accounts and the rule of law and we have inflation, over a long period of time under control, so that the dollar preserves its value. And so our markets are the most liquid, and it's the place where people want to be. Over time, the question is, if some want to move away from the dollar, what will be the effect on us? I don't think it's something you would feel right away. Over time, they would have to create an economic ecosystem, whereby another currency becomes, a better currency for them to use. What we can do is we can make the dollar the most attractive currency by continuing to have the rule of law and open capital accounts and make it an attractive place for people to invest and to use in their businesses. There wouldn't be any short-term effect of that. Over time, though, it would, I suppose it would diminish our status as the reserve currency. It's also possible to have more than one large reserve currency, and there have been times when that was the case, and so it's not really clear.
Thank you. My time has expired. Thank you. I yield back, Madam Chair. Thank you.
Thank you. The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Madam Chair, and to continue several points that a number of my colleagues have raised. As Putin's aggression in Ukraine has continued to escalate, U.S. and its allies have responded in a unified voice to condemn Russia and apply economic pressure. Chairman Powell, could you discuss the difficulty of predicting what the implications will be of locking Russia out of SWIFT?
So again, on sanctions, we're not the right folks to ask. We don't design them. We don't implement them. So it would be really a question for the administration.
Let me word it this way. How sweeping do you foresee the ripple effects through the U.S. financial system? Is there an effect on us as those actions take place?
With big actions like this, there may well be unintended and unexpected effects, and hard to say what those might be. In the economic sphere, you're seeing, not directly to your question, but we're seeing concerns over palladium and neon and corn and wheat, shortages of those potentially, but so it would be difficult to say exactly what the effects could be over time. The United States, our financial institutions and our economy do not have large interactions with the Russian economy. It's a relatively small thing, and it's gotten smaller and smaller in recent years. So there wouldn't be, direct effects from these kind of things on the U.S. economy. It's hard to think what the second-order effects might be.
Thank you. You've answered my question. As Congresswoman Wagner touched on, the price of oil has continued to climb during the past year to its highest level in more than 7 years. And we now see international banks appropriately shunning Russian oil, even without energy sanctions. Could you describe the range of different scenarios the Fed projections paint in regard to this? And along with that, how do you see this potentially impacting the already rampant inflation issues?
Well, obviously the price of oil depends on events that haven't occurred yet. It really depends on where this goes going forward. We have seen prices move up, including just in the last couple of days. And they moved up quite substantially since, if you go back 3 months before this incident kind of began, prices are up quite a bit. The effects are going to be passed through into gas prices, into lower economic activity, and into inflation, headline inflation. And the larger the increase, the larger the effect. But the question then will become, that's a price level change. Is that going to lead to repeated inflation increases at that time? And that is not necessarily the case, and of course we would use our tools to make sure that it's not the case.
And of course, representing the constituency I do, which is both oil and gas and production agriculture, we take very careful note of what those actions will affect, how they will affect world crude oil prices, and of course, the Ukraine being a very historic major grain producer, my wheat people also are prepared to step up and match that. But it all underscores, I suppose, the increase in energy production in the United States and supporting policies that will not penalize or drive capital away from domestic oil and gas production. That's more of an editorial on my part, Mr. Chairman, but I note that we stand ready in this country to replace resources that may not be available or affordable for the rest of the world, and we just need a little incentive and encouragement from this side of the room to utilize those things. So my last question in the time I have remaining, the economy is currently operating in what I think we'd all describe as, at the very least, massive economic uncertainty. And when you deal with this 40-year inflation and the supply chain issues and the COVID-related issues, hopefully as we're in that final stage, can you elaborate on how critical it is for the health of the economic system to be reliable and to maintain liquid markets so we can navigate through all of whatever lies ahead of us?
Yes, so I would say our markets have been functioning well. There's a great deal of liquidity out there. We have now, between our swap lines and our repo facility for other foreign central banks and our standing repo facility in the Treasury market, we have institutionalized liquidity provision. And I think just the knowledge that that is there will help support good market function, which, despite all this volatility, we still have.
Thank you, Mr. Chairman. I yield back, Madam Chair.
Thank you. The gentlewoman from New York, Ms. Velasquez, who is also the chair of the House Committee on Small Business, is now recognized for 5 minutes.
Thank you, Chairwoman Warder. Chairman Powell, thank you for being here today. Given what you said about the upcoming meeting in March and the illegal invasion of Ukraine, how is the Fed coordinating with other central banks around the world and accounting for their actions when considering adjustment to interest rate policy here at home?
So we're in ongoing contact, it's fair to say, with our major central bank colleagues, and actually we have a meeting of all of them on Monday morning at a virtual meeting at 7 a.m. on Monday. So it's something that we do regularly. That said, we conduct monetary policy to achieve domestic objectives, specifically here in the United States, maximum employment and price stability, and that's what we use our tools for. But it's of course the foreign events are very much top of mind right now, and it's enormously helpful to understand the perspectives, particularly of the Europeans who are so much closer physically to what's going on. So that's an important channel for us.
Thank you. And Chair Powell, last week the Fed published its 2022 Small Business Credit Survey. Among other things, the report found that small business applicants that used online lenders for their financing needs reported more challenges with their lenders than did applicants at other sources. The top challenges faced by borrowers from online lenders were high interest rates and unfavorable repayment terms. Can you explain the report's finding and what it could mean for small businesses that utilize online lenders to satisfy their financing needs?
So if I recall that survey, it did raise some interesting questions, and our people looked at it and actually saw differences in data gathering. So it's not clear that the data in the two surveys was comparable, but I do think it raises interesting questions, and we'll come back to your office on that.
And it might raise interesting question where we, through legislation, could provide some relief and regulations so that small businesses are not shortchanged when it comes to the most important element for any small business, access to capital, affordable capital. Chair Powell, during public remarks last month, Acting Comptroller of the Currency, Sue, stated that in the not too distant future, the OCC, Fed, and the FDIC will issue a joint notice of proposed rulemaking to update the Community Reinvestment Act. Does the Fed also believe a joint NPR is possible, and when do you expect it to be released?
Yes, we do. We think that will be ideal, and we're working very closely with the OCC and the FDIC. And to come up with a consensus notice of proposed rulemaking reflecting all of the comments that we got on our advance notice of proposed rulemaking. I think the timing is soon. I wouldn't want to put a specific date, but I know that we're going back and forth, and it feels like we're getting very close.
Right, thank you. And Chair Powell, a note published by a Credit Suisse strategist over the weekend warns that a decision to exclude certain Russian banks from the SWIFT system, which I support, could result in missed payments and giant overdraft with significant consequences for money markets, thereby forcing the Fed and other central banks to intervene to enhance liquidity to offset missed payments. Do you see this scenario as likely?
No, I don't see that as likely. Of course, we always appreciate looking at different risk scenarios, but again, given the relatively modest exposure that our banks have directly to Russia, and given the existing tools we have to provide liquidity, I don't see that as a likely outcome.
Okay, thank you. I yield back.
Thank you. The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Madam Chairman, thank you very much. Chairman Powell, thank you for taking time to not only join us today, but your insight into monetary policy. The monetary policy report of February 25th, seemingly still hot off the press, brings about, I think, a good review of the Fed's analysis of where we are. And I know there's that temptation by members of Congress to hold you accountable for things which are not within your purview, but on page 3, you talk about special topics, page 3 of your February 25th, 2022 monetary report. Special topics, low labor supply. Next, it goes to several other issues, then supply bottlenecks. As a member of Congress from Texas, both of these are highlighted to me on a daily basis as I receive feedback. This is inflationary also. We have taken a bit of time with you to probe with you your ideas that I think you have professionally handled on behalf of yourself and the Fed, the issues related to energy. But the bottom line is we can't get people back at work. We find that turns into a low labor supply, and then we've got bottlenecks. These are all hand in hand, glove in glove together, in my opinion. I took a few minutes just now to look at the labor unions and schools, teachers unions. But let's move to the federal government. Where is the federal government on their employees coming back to work now by OPM?
I don't know. We're an independent agency. I'll tell you where we are, we're in the middle of that process. Probably closer to the beginning than the middle.
I know you are, but you see, if they don't come to work, then others don't come to work. So I think your point and my point is well made. I believe that what we need is your robustness, not just your acumen in these issues, and your robustness within the administration to actually let them know that for this report, monetary policy, to be correct, that you believe inflation is a short-term, meaningful hindrance on our economy. They're going to have to make, meaning the White House, policy. They're going to have to understand what caused this. And I think that this administration, I think the Democratic Party, I think this Congress has made friends with inflation to encourage it. And that if your prognostication is going to come forth that we end this inflation, we're going to have serious changes. Because right now in Texas, which has been relatively open, I don't see relief on the horizon. And I think that this administration, this Congress has a lot to do with it. So without chastising you, I meant to help you. I would like for your voice in this administration and within halls of Congress, perhaps doors that are shut, for them to understand that they have actually made friends with and are continuing inflation, whether it be with teachers' unions or whether it be with OPM. And we've got to get serious about getting people back to work, because as you tap down the amount of money that is put in the economy, as that moves, it's going to have to correspondingly have people that come to work, that pay taxes, that move the economy, GDP as a term we used earlier today. It's shifting this big, massive task. So you've almost got a whole 30 seconds left. But I'd like you, without defending yourself, to say to you, I'd like for your voice of reason, of prosperity, of future to come true as you would like. Did I ask you a question? Okay, I'm going to support you. I'm for you. How can we help you?
I do think honestly, we have the tools and we have to use them we will use them to get inflation under control. But to the extent we get help from the supply side, it'll make that job so much easier. It's about labor force supply. It's really about supply constraints and shortages and that kind of thing. It's also about exogenous events like a war, which will drive up the price of oil and gas, and that'll get into prices, certainly, and we'll make sure that it doesn't provoke a cycle of inflation.
This is what happens when you have to rely on other people for your food, cheese, and energy. Thank you very much, Mr. Chairman.
Thank you, Mr. Sessions. You can help Mr. Powell by asking your friends on the Senate side to confirm his appointment. The gentleman from Georgia, Mr. Scott, who is also the chair of the House Agriculture Committee, is now recognized for 5 minutes.
Chairman Powell, how are you?
Fine, thank you. How are you, Mr. Scott?
I want to sound the alarm here this morning, and I want you to listen to me, and I want the nation to, because I'm the chairman of our House Agriculture Committee, and I'm very worried about this turmoil over in Ukraine and Russia's violent, illegal, and criminal action that they're taking, and the impact that this has on global trade, and most importantly, our own food security. We could very well be on the verge of a hunger crisis all over this world. I want to share with you some research and the nation so we can understand what this Ukraine-Russia situation is causing. Today, Russia alone is producing more than 2/3 of the 20 million metric tons of fertilizer used to grow corn and wheat around the world. One country producing 66% of the fertilizer that is needed. And when you combine Ukraine and Russia, also, these are the two largest exporters of wheat, corn, and barley, producing 1/4 of the world's wheat in these two countries, making this impact a crisis of soaring magnitude when you have this much, and these two countries are warring each other. So I want to sound the alarm on this. I want to ask you this question. I want to ask you, Chairman Powell, the disruptions and rising prices from these commodities will destabilize global food markets and threaten our food stability and social stability. So my question to you, Mr. Chairman Powell, to what extent could these developments create a financial stability risk here at home and abroad. And what must we do? We can go without a lot of things in this world, but the one thing we cannot go without is food. And when you have this much power on our food security for the world in the hands of these two countries warring at each other at this time, what can you do about it?
Sir, I think your point is very well taken, and I think you know, it's shipping, it's corn, it's wheat, as you pointed out, it's fertilizer, and we see that getting into food prices and into the food supply just in these early days after the sanctions have been put in place and the war less than 2 weeks old now. I really, the Fed doesn't really have the tools to address this. This is really a matter for Congress and the administration, I think. But you're right to call attention to it, and I do think that this is understood and understood that that help will be needed here.
Well, I just want to say that we cannot allow the world to get into this desperate situation. So I'm giving this as sort of a Paul Revere moment here. I'm not saying the British are coming, but I'm saying the Russians are already at the door, and they could cause worldwide hunger. And I hope that free nations around the world can come together and realize that this is not just Ukraine's fight. It's our fight. And we have got to win this fight. And hopefully we can get more of our nations to come together and end this situation in Ukraine and Russia before it causes truly a worldwide war.
Thank you very much. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you, Chairwoman Waters. Chair Powell, when your former deputy, Mr. Quarles, came before the committee last May, I pointed out to him that just a week before the April inflation rate had been reported at 4.2%, the highest since 2009. The rate in March 2021 had been only 2.6%. I asked him if we were paying the price for monetizing a huge federal debt, what the late Dr. Friedman and former Chair Bernanke both called helicopter money. Mr. Quarles told me that he didn't believe the Federal Reserve was monetizing the debt. Mr. Chair, looking back a year, does the Fed continue to deny that it has been monetizing the debt? And do you believe that you should have acted before now to rein in the inflation rather than let it now exceed 7.5%, the highest rate since 1982?
So I think by monetizing the debt, what that means is for the central bank to purchase the debt with the intention of holding it. And that's not the intention of here. You know, we're about to start shrinking the balance sheet, and we will return the balance sheet to, you know, a size relative to our economy that it was before. So also that is not at all our intention. We purchase longer-term securities in order to drive down longer-term interest rates to support economic activity. I'd also say that that's not really what we think of as the source of inflation. Admitting that inflation, proclaiming that inflation is far too high and that we are committed to using our tools to get it back down, it's really about very, very high demand, particularly in the goods sector, related to a spending shift that happened in the pandemic, and supply constraints that we didn't foresee. International supply chains, labor constraints, low labor force participation, right across the economy. It's a very different kind of inflation story than we've had in the past, but it's one that we have to deal with, and we will deal with it.
Chair Powell, when you appeared before this committee in March of last year, and I asked you to clarify the purpose of the Federal Reserve collecting data and employing stress tests related to climate change, you assured us that the Federal Reserve would be collecting the information to help financial institutions learn about climate risk and wouldn't be using the information for regulatory purposes. In recent weeks, considerable controversy has emerged in the confirmation process to fill 4 vacant seats on the Federal Reserve Board. One of the nominees has a record of advocating for aggressive Federal Reserve regulation related to climate change, including actions that would regulate capital allocation away from fossil fuels. I won't ask you to comment on the confirmation process, but can you continue to assure us that the climate data and stress test proposed by the Federal Reserve won't be used for regulatory purposes and driving investment away from traditional energy sources here?
We call them climate stress scenarios, and we haven't, we're actually just building the capability to do this, and the idea is not to use them the way we use the traditional stress tests to set capital levels, in effect. The idea is more to allow financial institutions and also regulators to understand better the extent to which and the ways in which climate financial risks has any implications for the banks. That's the purpose of it. I'll add, though, that it is not our job to tell, we don't think, to tell banks which legal companies they can and can't lend to, and I don't see that as an appropriate role for us.
I'm really glad to hear that. So that's an absolute, unequivocal, guaranteed answer that the data will not be used for regulatory purposes in any way whatsoever.
I can just say that first of all, we're not even doing the tests yet or scenarios yet, but certainly that's not going to be their construct. The construct will be what I said, which is to help us understand better, not to set capital or otherwise put further regulatory requirements on.
Thank you so very much. I deeply, deeply appreciate that, and I yield back. Thank you.
Thank you very much. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Good morning, Mr. Powell. How are you?
Fine, how are you?
I'm good. And I just want to thank you. You've been getting picked on inflation, but I'd like to start with chart 1 of your book. I always ask about your charts because I love them. And chart 1 shows a tremendous growth in employment, as does chart 2 shows a tremendous drop in unemployment, the converse of it. And it's like dropped from about 14% to 4%. Do you think that the Fed's monetary policy helped in reducing the unemployment rate?
Yes, for sure.
Okay. And, 2 years ago, we were going into a pandemic, and you and I had a conversation about the potential for a worldwide recession of a magnitude we'd never seen. Did we hit that? Did we get that recession?
No, we didn't.
And you may recall, I'm a bankruptcy lawyer. That's what so I look at things kind of with the pessimist eye. I expected many bankruptcies. Did we have those? Did we have the bankruptcies that we thought we might get?
We sure didn't.
Okay. Do you have any idea how much the gross domestic product has grown in the last year?
I want to say 5-point-something%.
Well, it's actually more than that. And one of your charts has that. I think it's on page 23, chart 14. It's went from 2020 to now. It went from less than 17.5 trillion up to 20 trillion. So it's substantial, about 15%. Now, I don't think it's that much, but it's substantial. Did we expect that when we went into COVID?
You mean since the trough? Yeah. No,
Yeah.
I was just giving you the last year. So, as you know, we were looking at some really bad scenarios and hoping they wouldn't happen in the first half of 2020.
Now, the Fed took some pretty dramatic actions, as did central banks around the world, did it not?
Yes.
And the Congress, led by the Democrats, took some pretty substantial and dramatic steps, including the CARES Act, the American Rescue Plan, the infrastructure bill, to build a better America and to help us get out of what looked like it could be a tremendous recession. Now, I could ask you, did it not? But I'm not going to lead you in that one. But what I do want to talk about is the fact that despite the one flaw that Republicans can find, which is inflation, we have lower unemployment, a bigger economy. Do you know how many other countries have higher inflation around the world than America? 64, according to Trade Economics Inflation of country by country. 64. This is a worldwide phenomena, is it not?
Yes, it is.
So I want you to take a look at a couple more of your charts, because I think these are probably the most important. And they are the median wage growth found in chart C on page 12, and the change in the price index for personal consumption on the next page, found on page 13, diagram 8. According to your chart on page 12, the bottom quarter of wage earners have had their wages increase by almost 9%. Do you see that?
Yes.
And the next quarter, by 6.5%, 7%. Do you see that?
Yes, I do.
Okay, and then you look over to the next page, and we're running, I think you said it, about 5.5% inflation. So wage earners in the bottom half are making more money than they are potentially, if I do the math, they're making anywhere 8-9% against a 5% increase in cost. Now, it's not apples to apples, but wages are going up, are they not?
So wages at the bottom, in the bottom quartile, have gone up in real terms. I do not think that's true for the second, third, and fourth quartiles, but it is true for the bottom quartile that their wages, nominal wages, have gone up higher, more than inflation.
Okay. So last question. When you and I spoke at the beginning of this year, and my time has expired, I'll ask it to you later on. And I thank you for your service, sir. I thank you for keeping us out of a recession. I think we built a better America by staying out of the recession. I yield back.
He may
Thank
not
you
thank
so
him
much.
later.
The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. Thank you, Chairman Powell, for coming here.
I don't know why my mic was muted. I'm sorry. What say? I was asking you guys, what's going on with the Paul Revere thing? What's that all about? I didn't hear it. First off, so there's that. I'm gonna pause this video right now. I really don't want to hear any more at this point, but I wasn't even listening while I was gone. But I was asked by Jana earlier, before I went on my break, that to check something out in reference to the Pantheon's post for the SR NYSE 2020 85. I haven't sent her back a message yet, but I'm going to talk about it right here. I don't know if she's listening or not, but I will send her a message in case she doesn't hear it. But what I'm going to say is this. I went through and looked. I'm kind of briefly kind of looking over it right now. And there's a lot to look over. My guess, I'm going to guess that Pantheon's done a really good job of probably looking it over. I don't know Pantheon. I don't know what kind of work he does. But I will say this. In regards to AMC issuing less than 20% of dilution in any given year based off of a COVID ruling from 2020, a change in rules that was modified. I think Adam Aaron was very, very clear in one of his statements in the shareholder meeting that he had last night, the quarterly meeting, in which he said that he is listening to shareholders, that they don't plan to issue more shares into the market. So the fact that it's a could happen scenario is exactly what it is. It's a possibility, but it's not something that Adam Aaron has identified as something that they want to do. He says he wants to put shareholders who save the company, their objectives first. And so, and he said that in his in the shareholder meeting last night. So I would say that while this appears to be a possibility based on what I'm just kind of looking through very briefly here, trying to look through the filing, it does look like that is a possibility. I'm going to have to dig deeper into this, but I will just state that while this may be a fear of a possibility of something that could happen, Adam Aaron's been very, very clear about the fact that they're not interested in issuing more shares. So, as shareholders, we'll have to wait and see. Are his words are they? Does he stand by his word? That's what we'll have to see. So taking a look at one more thing here, though, because I kind of want to go back to something I was going to go to earlier today. I'm going to go over the numbers. I'm not going to go back to Chairman Powell. I want to read to you guys some of the stuff that was said from last night regarding the NFTs. Sammy was asking about it like way earlier this morning, and I feel like I owe an apology to Sammy because it's he wanted to talk about things and I derailed and went to Chairman Powell. But I really do kind of want to talk about some of the things that were said last night. And so I've got it all pulled up here. So let's go through the numbers and then we're going to dive into that. And I'm going to deviate away from Chairman Powell. Let me update fidelity. Taking you guys to the other screen. I'm going to move some stuff around here in the background. And we'll take a look at our numbers. Off exchange, 53 and 13.45 an hour ago is now 52.96 and 13.57. So still really high numbers, but dropping slightly. Let's see if Ortex is fine. I was going to send Ortex a tweet being like, what up? Why are you guys sucking today? Why are you still sucking? No, that's it. I'm sending him a tweet now. It's like, why am I paying you guys money if you're not going to give me information? I'm sending Ortex a tweet. All right, tweet sent. Just kept it nice and simple. Said, what did I say? I said, at Ortex, why am I paying for live updated information but not getting it? AMC, $AMC. So yeah, this information is the same information we had earlier this morning. No new information. Fake news. Not my fault. It's not my fault. It's not my fault. All right, $20. I'm looking at the options now. At a $20 strike price, there's 11.9 thousand contracts now for the calls. On the put side of things, that really high volume for 16 went from 14.7 thousand contracts to 16,000 contracts now. So it's pretty high volume. Did I say open interest? Pretty high volume. I didn't mean open interest if I said it. Really high volume on the $16 strike price on the puts. So signal for about an 18 close for the day today though. Taking you to the other page, orders by Fidelity customers. AMC was 5th an hour ago, slipping again to 6th, but we still have an even stronger buy to sell ratio of 71-29. Looking for GME on the list. I do not see it. Jimmy can't come out to play. Say it with me. With the shares locked away. I know you say it. I know you say it in your head when I say it. I know you do. 650,000 shares available to borrow. I think that's what it was a little while ago. So they returned some shares there. Okay, only returns in the last hour. So no new borrows. Total amount of shares borrowed so far for the day-to-day is at 2.5 million. 10.1 thousand contracts are in the money on the call. 66.5 thousand contracts are out of the money on the puts. Trigger price for SSR, $16.49. Batman. I go see it tomorrow. Can't wait. I can't wait. Batman. NASDAQ is up 1.25, Dow Jones is up 1.79, and the S&P 500 is up 1.72. The market is currently advancing with 4,889 advancers to 2,617 decliners. I'm not going to say that. The VIX is down 6.27%, IWM is up 2.02, Tesla is down 1.29, Amazon up 0.38, Cinemark up 0.99, Doge is down 0.32, Bitcoin down 0.2, GameStop is down 0.04, Hood down 4.55, and AMC is down 3.28. We currently have 2 million more in outflow than we have in inflow. 19.35 million shares having been traded for the day today. Let's see what kind of pace we're on. We're on pace for about 46.3 million shares traded for the day today. That's going to be just a little bit higher than my top. I suggested somewhere between 25 and 45. It's definitely panning out that way. On the daily, we have more selling pressure than buying pressure with an RSI of 47.12. On the hourly, we have more selling pressure than buying pressure with an RSI of 40.53. On a 30-minute interval, we have more selling pressure than buying pressure with an RSI of 41.48. On a 5-minute interval, more buying pressure than selling pressure with an RSI of 46.44. It does appear like we're getting that head and shoulder kind of pattern. Hold on a second. Boy, it almost looks like an inverse head and shoulders, doesn't it? But it's not doing what it's supposed to do. It's like, here's your shoulder, here's your head, here's your shoulder, inverse, but it doesn't take off like it's supposed to. So if you look at it the other direction, it'd be shoulder, head, shoulder, but it should be lower, not higher. So I don't really think this is a head and shoulder pattern at all. It looks more like a sine wave, like a digital sine wave. Let's see if we can get like an idea of where this is heading to. Let's try this. It's close. I feel like this is a descending parallel channel. Price is falling, volume is falling. This should be bullish. So potential breakout heading back up at some point, just not sure when. I mean, I can move this bottom line two different places. I can move it here. There's several touch points where you have like two false breakouts of a descending parallel channel, or I can put it right here, and you can see that there's, you know, just most of the touch points are there. I'm gonna keep it like this, I think. Typically speaking, breakouts sometimes, or used to in the past anyways, would happen kind of at these points in time where you have a level of support and a parallel channel meeting or intersecting, and obviously leaving out just the tip, you have a breakout period. So we might see this kind of bounce off of this a couple times, kind of maybe bounce off of 1723 range, kind of do like a up and down kind of number, consolidating and then breaking out up. Let's see if that matches one of those patterns that I pulled up from earlier. Yeah, it could. So let me get rid of my drawings. And so potentially this could be like a descending parallel channel. So breakout closer to the end of the day today, and let's see if that matches up. It's not really close to the end of the day, but we'll see. I'm going to leave this like it is. Oh dang, hood is down to 1129. Not looking good. Let's see what you guys are writing here. Real Rugged says, when does February 2nd half failure to deliver data come out? And it would come out the 15th of this month. So the dates for the release of the failure to delivers is always lagging by 15 days. And they're released on the 15th and the last day of the month, I believe. It may be the 14th and the last day of the month. I think it's the halfway point, so it should be 15 and 30th or 31st, whichever day falls on, the end of the month falls on. Danny, those I'm in a Discord, and I don't think that I'm allowed to say who they come from, but every single morning he gives possible pattern predictions. So they're basically fractals that he thinks that are going to project for the day. And so, basically like the red, the difference between the red and the green is that the green are, or the red, I'm sorry, are just inverse patterns of the green. So he basically gives like 3 patterns for the day and says like it's going to be one of these patterns, or it could be the inverse of the pattern. And I don't know. I think it's kind of helpful. It's not a must. It's not like I'm not trying to say that, oh, we're definitely going to follow one of these patterns. But I think that more often than not, he seems to be getting these pretty close, which is kind of interesting. Did I say IWM was up? IWM is up 2.06 and we're down. Yeah, you're right. Keto, kind of weird. Yeah, we are inverse to the IWM. IWM is up 2% and we are down 3. It does make no sense. So, Real Rugged, I saw you guys were saying something about Paul Revere. What are you guys talking about there? Because I'm kind of curious. Did you guys start talking about it again? Because I missed it if you did. I'm going back up here. But Donkey Kong said that senator said he felt like Paul Revere. He said it should be a criminal act for those promoting stocks on social media. He's biting my moves. Okay, I'm gonna go. Danny says he's showing those same patterns. Okay. I'm not saying that they're not, I can tell you they're not from TWE, but TWE and I are both part of that same Discord. So if he's getting them and he's showing those same patterns, and he's seeing them from where I see them. I mean, Danny, it's the whole reason why I named that show what I named it. The redcoats are coming. I mean, it wasn't, the market was definitely signaling something strange was going on. Let's see here. Let me go into what it was I was going to talk about, because I really want to talk about this. Sammy kind of wanted me to talk about it earlier today, and I didn't get to it. So let's talk about this. I'm going to kind of read off some of the stuff that Adam Aaron said yesterday in the shareholder meeting. He said, let's quickly look at 7 of the initiatives and innovations already or soon to be underway. 1. NFTs. During Q4, AMC became the first theatrical exhibition company to collaborate with a studio partner to offer an exclusive non-fungible token, or NFT, to reward moviegoers for their AMC attendance. AMC worked closely with our partners at Sony to launch the Spider-Man NFT. I'm not going to read everything. He's saying that one of them sold for $17,000, and there's also NFTs coming out for Batman. They're expecting to continue jointly with studios and separately by themselves to create future NFTs. And they're also thinking, it sounds, or at least he said, for example, selling some of the NFTs in addition to giving them away free and getting a commission on the transfer of NFTs when and if they're later resold. 2. Cryptocurrency. We continue to explore opportunities to both provide convenience and to create value to our guests through the use of cryptocurrencies. Last year, they introduced the Bitcoin, Ethereum, and Bitcoin Cash and Litecoin using their website and mobile app. Later this month, in March, they will introduce the ability to transact and make AMC online payments in Dogecoin and Shiba Inu. And then he said here, we continue to explore how else AMC can participate in the. I have no idea what this word is. Burgeoning crypto universe. Burgeoning. It's probably burgeoning. I don't even know what the hell that word is. Sorry, guys. Not a word person. I'm all about numbers. Hate words. But yeah, he's saying, and we might we might remain quite intrigued by the potential business opportunity. We've been looking for some time at potentially issuing our own cryptocurrency. So first off, they accept cryptocurrency. Now they're talking about being able to create their own cryptocurrency. It says here that will depend on regulatory frameworks surrounding cryptocurrency unfold. More to come when we have something more concrete to share. As a side note, a benefit of our having to program cryptocurrency functionality for our website and mobile app, AMC also picked up the ability to accept Apple Pay, Google Pay, and PayPal online. Incredibly, in just a few months, these latter three forms of payment, along with cryptocurrency, already constitute more than 15% of our online ticketing activity, as seen in the fourth quarter of 2021. So they're talking about they accept cryptocurrency, they're talking about creating cryptocurrency, and obviously the third portion to that would be selling cryptocurrency, which would give them the trifecta that I don't think any other business has. You guys will probably be able to correct me if I'm wrong. They started talking about charging for premium seats, which are the best seats in the house. As do just about all the sellers of tickets in other industries like sports events, concerts, and live theater, for example. It's not normally been a practice in the United States, which is true. It's always been first come, first serve. If you look at our year-over-year pricing success, as was demonstrated Q4 numbers, you will see. I don't know if I'm really fond of the whole idea of charging more for specific, like ideal seating. But I'll tell you what, though. Nothing pisses me off more than having to, like, jump onto an app to try and be one of the first people to buy tickets to opening night of a movie and not being able to get a seat. And if the company can make more money off the idea that people have to pay more for certain seats in a certain section of the movie theater, and it keeps those seats open just a little bit longer for somebody else who's willing to pay extra for those seats. Where there's a demand, they should try to profit off of it. Okay, number 4, AMC Perfectly Popcorn. So I have an insider into retail popcorn, and they have not seen anything as of yet come through for AMC Popcorn. That doesn't mean it's not on its way, but they just haven't seen anything quite yet. And a lot of people were thinking that they were going to announce it coming out on the shelves soon. Nothing yet. He says here, our foray into the multi-billion-dollar popcorn industry during 2022 is on track. Remember that AMC knows something about popcorn. On a peak day, we sell 50 tons of this stuff. And don't forget that they did hire that new executive from Frito-Lay, who she's going to be heading up that endeavor of making that perfectly popcorn something that people want to buy out of the stores. Again, guys, I can't see what it is you're writing right now while I'm reading this stuff. So you guys are writing things. Her name is Ellen Kopakin. Kopakin, maybe? Or Kopakin. She's packing. She's got heat, guys. Don't mess with her. She's got the newly created position of growth strategy. She also used to work for PepsiCo at Frito-Lay. Okay. And also at Hostess Brands. So she knows a little bit about something about what she's doing, probably. Okay, here's the 5th item. I'm gonna take this article off the page here because I kind of want to see what it is you guys are writing, so that I can look at both. Casey's got a guy, a popcorn guy. He's not a popcorn guy, but he works in retail and knows whether or not the shelves are getting stocked with it. So I asked him to look for me. Yes, I can, Bird. I can refresh Ortex. Let me give it a go. We'll see if they fixed it. Nope. Still the same. I sent out a tweet to him. I don't know. We'll see what happens. I don't like paying for something I don't get. That kind of frustrates me a little bit. Crazy Pepe said, do you think the revenue for AMC Dreamscape is together with their movie ticket sales, or would it be... Wow, you got me on that one, Crazy. You know what I found very interesting? I found very interesting that there was only one question that they fielded from the phone calls, which I find very, very strange and odd. Like, I really feel like as investors, we should have been asking questions. Why weren't we asking questions? Or did they only limit questions to actual business insiders? Because the only one that was asked was obviously somebody that Adam Era knew and was an institutional insider. So I think we should be asking questions, guys. I was really disappointed. I was listening to the call through a space call, so I wasn't actually logged in through the phone. But man, I'll tell you what. Next time, I'm calling in and I'm listening to it from my phone. I do like the group atmosphere of listening with other people, but nobody said anything, so there's no reason why I couldn't have been on the call myself. So I'm going to get on the call next time myself. And when it comes time for asking questions, I will be asking questions. Because I think it's absolutely ridiculous that only one question was asked when it came down to question time. Because what Crazy Pepe is asking right there is great. In fact, I'll go one step further. I will say that next time when we have a quarterly earnings report, I will get questions from you guys. And if I'm the only person who's there to ask questions, I will ask what I think is the most important questions out of those. Because dang it, we want to know answers. And I think we deserve to know answers. Russian banks refusing to pay interest on bonds worth 29 billion, margin call incoming. Well, the margin calls would be on the banks of Russia. And if our banks aren't getting, or whoever's owed the money here, then if they are the people who would get margin calls, could possibly see them. I know that some of the people who held the bonds were BlackRock, but BlackRock's long on AMC. So whether or not that would put or apply pressure on them to recall some of their loaned shares, that's another story. Keto says, can you overlay IWM and AMC in a few different time frames? I can. We'll do it here, Keto. Give me just a second. I want to finish reading these. I'm almost done with them. I think I'm on 5 and there's 7. All right, let me finish off what I was reading. Where are we at here? Oh man, when I resized the screen so I could see what you guys were writing, it completely threw off where I was at. Give me 1 second. Oh yeah, premium for the seats. Here we go. Okay, so Perfectly Popcorn was after that. I finished that one. We talked about, it's either Ellen or it's got to be Ellen. 5. We're on to 5. Additional, that should have been additional theater. It sounds like they're going to add additional theater locations during 2021 and 2022. We acquired 7 high-profile and strategic theaters, including 6 former ArcLight Pacific theaters. That's about a third of their circuit, located in major metropolitan markets like Los Angeles, San Diego, Chicago, and Washington, D.C. So number 5 is purchasing more movie theaters. Okay, and here's the one I thought was kind of cool. I know you guys didn't seem so hot on it earlier when I mentioned it, but so this must be number 6, but I don't see where he says 6. Watch this space for more announcements as AMC continues to grow. Next, a branded credit card. Some of you may have seen 2 completely voluntary and well-earned executive retirements announced yesterday afternoon. So they filled those 2 spots with very talented executives with superb individuals to carry our legacy forward. But the credit card, yeah, I want to see the diamond-handed AMC card. That's what I want to see. So it sounds like these new executives that they're backfilling with have credit card experience. One with Chase, and the other with the other one just worked. It sounds like Wyndham Hotels and Resorts, Starwood Hotels and Resorts, and Deloitte Consulting and American Express, and he has an MBA in Harvard Business School. So some backfilling positions that are geared towards credit card issuance. Here's, I think, one of the parts right here where he may have talked about their dedication to shareholders. He says, our ambition is much more grand than that. Our shareholders have armed us with 1.8 billion of year-ending liquidity, and there may be creative ways for us to raise even more money. I keep on getting offers from our shareholders, for example, that they want to chip in and help us pay down our debt. I don't know exactly that that's in the cards, but I do admire their passion and dedication to AMC nonetheless. They've shown it over and over and over again. Still, with 1.8 billion of cash and undrawn revolver at our disposal, that can be used to outlast the pandemic, to pay down debt, to innovate with our core and related business, and for transformative M&A. We encourage those of you who look at AMC to so boldly, because within AMC we are thinking boldly. Before turning the call over to question and answer, I would like to make a few more specific observations about our enthusiastic, avid shareholder base. 615,000 individuals have self-identified as AMC shareholders. This is the part where he talks about how of the 4 million individual investors who care about AMC futures, it doesn't seem like any of us have left based on their numbers, and that we own more than 90% of our officially issued 516 million shares as of today. So if we look down here into the free float, it's not updated on Webull as of yet. It still says the 512.3 million shares. So I would expect that that's going to be changing here to 516 soon. That's going to be probably the bonuses that they're getting from the results from the quarterly report. And this is the part right here in reference to that that video by Pantheon about the SR NYSE 2020-85. He says here, one thing that I'm particularly proud of, we kept our word to our shareholders in 2021. It is widely known that we are essentially out of more common stocks or shares that could be issued to the public in any quantity. Although a decade ago, our board did authorize the potential issuance of preferred shares if we so choose. Some of you are anxious about this whole topic, and so I give you my word back to in early summer of 2021 that we would sit on the sidelines for the balance of the full year 2021 on the equity issuance, and that is exactly what we did. We kept our word. Some of you then speculated that we would rush to immediate issue new shares to the public early in January as the new year started. It is already March. Again, we have not done so, retaining your support, leading your company smartly and well, keeping our word to you. These are extremely important to us. They're extremely important to me. That's the report. The fourth quarter was a spectacular one of AMC, the strongest in 2 years. And so there you go. He's saying that they kept true to their word that they weren't going to issue more in 2021 and that they have not rushed to go issue more here in 2022. So he's saying here we are in March already. We still haven't issued more shares than we could have, but they have not. MCon says, so is the blue blocks where we are going before breaking out? Or is that just it's a guess? It's a guesstimate. I'm just trying. Sometimes what happens is you see price kind of do this like up and down motion between like a level of support and a level of resistance, which would be the descending parallel channel. And then you see just kind of like this bouncing around until it consolidates down into the end here and then breaks out. So it was more of a suggestion than it is a fact. But as you can tell right now, it looks like it's breaking out here. It may just be a fake breakout. We'll see. We'll see what happens. Let me see. Let me read what you guys are saying. Justin says, what is the purpose of the 7 a.m. stick of volume? What makes it? Why is it always at 7 a.m.? What does it imply? I don't know the answers to these questions, Justin. It's been speculated before that they're the closing of orders from the previous day for when the market starts to open and banks are able to do transactions, that they're the completed transactions from the previous closing, but I call BS, and I'll tell you why. I have seen it double the exact amount of pre-market volume. So whatever, when the market first opens at 3 a.m. my time, 4 a.m. Eastern, between then and 7 a.m. So 4 hours of trading in the pre-market. You have 4 hours of trading, and whatever the volume gets up to by that 7 a.m. pokey stick of volume, for some reason, it tends to double on that 7 a.m. point. And I don't know why that is. I don't have an answer. It's not always double. Sometimes it's more than double. Sometimes it's less than double. Today was a perfect example of where volume going into the 7 a.m. pokey stick of volume was only like 80 or 90,000, and it only ended up being like 26,000 worth of volume in that 7 a.m. So it was way less than double. And so I think this is just a theory of mine. You'll have to throw on your tinfoil hat. But my theory is that it could be used as an indicator for algorithmic timing for the day. In other words, if you had an algorithm, a way to be able to program an algorithm for the day, I want you to think back to the day. I don't know how old you are. I'm going to make assumptions on how old you are here, Justin, but if you would think back in the day, you had Scantron cards, right? You'd fill out all your answers onto a thing, and then you'd turn it into the teacher. The teacher would go scan it through a machine, and the machine would spit out some kind of, they'd say it would match the answers to whatever the key is, right? And so the key is the 7 a.m. pokey stick of volume, and the key says, this is what we're going to do today. Try to meet or match that as best as possible. Right? And so you have up and downs and all over the place, right? And so the stock market tries to trade in a timing that matches. Now, I think it's more of a timing thing, volume and timing related key. I don't necessarily believe that you can predict price based off of it, but I do think that you can. I mean, I feel like I come up with pretty accurate volume predictions at 7 a.m. in the morning before the market's even open on a daily basis, just based off of that one moment in time. And so to me, it's a timing slash volume indicator. I have never found a single person who's been able to explain to me exactly what causes it or why it happens exactly when it happens. I've only had theories. I never really worry about death crosses on AMC, Dan. I don't think that they're necessarily impactful for AMC specifically. Hey, Cannonball Bronco, that's awesome, man. Ooh, soon you can register gender as an AMC holder. What? Ooh. Dog fan says just saw 13F that Vanguard sold 40 million shares. Can you verify? I've already done verified. Already done verified, sir. Let me show it to you. This is old news. Old news. Let me show you where you can find this information. Oh man, it's hot. This is hot information. We are going to do things with this information after the MOASS is over. And I'm not going to say what it is. Here we go. This might be worth your time as a read. Actually, you know, I'm going to give you the the link that I'm going to put in here is going to be the link that gives you the second portion of the information. But there's a link at the very top of it to take you back to the first post. And I would read the first one first and then go back. So I'm giving it to you out of order, but there is a link at the very top to take you back to the original. ANOSA, I'll tell you, and I'm gonna be very frank with you here. I sense, and I may be wrong because I'm reading from a chat, but I sense despair. I sense despair. I don't think you need to be focused on what the catalyst is going to be. This is a long-term hold. You're holding something that costs them dearly. I wanted to say dearly daily. It's costing them dearly daily for you to hold your shares. The pain is not supposed to be on you. The pain is on them to get you to sell. Now, on your part, I sense desperation because you're looking for something to happen. And what does that lead to? It leads to trying to make something happen. We don't have to make anything happen here. We're doing that. We're already making things happen just by buying and holding, and that's it. That's all we have to do. And it's the beauty of everything it is that we're doing here. You don't need to look for a catalyst. The catalyst will come, like I've said before, in something that you couldn't possibly imagine. It'll just happen. When it does happen, you'll know. And the kitchen sink, when that comes, you'll know too. But you don't have to look for them. they'll hit you straight in the face, and you'll know it when you see it. There will be no mistaking it. This Bollinger Band that I keep putting up on a daily basis, it'll just blow right through the Bollinger Band and just keep on going. And it'll make the Bollinger Bands look stupid. And there'll be no mistaking what's going on. Don't grasp for straws. If you've already done the DD, and I hate this with a passion when people say the DD is done. And I'm not telling you that. The DD is never done. But I'm telling you right now, in regards to trying to find a catalyst, there is none. It doesn't matter how many catalysts you try to find. The one that causes this to finally kick off into margin calls will be one that you won't have ever found. Nobody will have found it. It will just appear, and it will happen. But you don't have to have despair, because what we're doing here is costing them money, not us. It's only costing us money when we sell. Don't be anything. I'm not telling you what to do. But you did your original DD, and you came to a conclusion when you started buying this. And I would suggest is that nothing has changed since you've done that original DD. Nothing that I've seen changes anything. And if I saw something that changed something that looked worrisome or bothersome or change the outcome of what could possibly happen with this, I'd let you know. You're not going to find it. You can look for triggers all you want, but you're not going to find it. We've looked and looked and looked and looked and looked, and we've found all kinds of triggers to look forward to for the future. None of them have panned out so far. Yeah, unfortunately though, you're not going to be able to see the whole picture. This is just kind of one of those things where it's like, something really stupid could happen. Like, and God forbid, I'm not trying to suggest this is the case, but President Biden could have a heart attack, keel over and die, and the markets just absolutely blow up. You know what I'm saying? Like, can you predict that? No. There's no way you can predict that. You can't sit there, you know what I'm saying? Like, if you keep grasping for those straws of what's going to cause this to happen, and it's something as silly or crazy as the president passing away from a heart attack, that's it. That's the straw. But you're never going to find it searching for it, because there's so many different things that could happen that could cause this to completely erupt. This is a market walking on glass, and it's any one of billions of things that could happen at any moment that's going to cause this to just completely fall apart. Bird Eye says Bollinger Band's bottom one goes down, top levels off. No, and I'm not understanding what you mean by that. I think I have heard that name before, Bird Eye. I was just using that as an example. I mean, there's just absolutely a billion things that could happen that would cause this thing to just absolutely blow up. I mean, a billion things. And you can just keep on grasping for, empty vines that are hanging for, you to grab onto because you're playing the game Uncharted, and you're just going to keep grasping, and you're just going to keep grasping and keep grasping, and it's a false sense of hope. That's what you're grasping for. Because really, what you should be grasping for is in your pocket. Put your hands in your pocket. Stop going like this. Put your hands in your pocket and reach in there. What do you have in your pocket? Most of you are like, nothing. You have shares of AMC. That's what you have in your pocket. Grab onto those shares of AMC. Hold on to those shares of AMC. Because that's the hope. That's the real hope. All these other situational things are just grabs. Grab, grab, grab. It's just air. Because you don't know what it's going to be. Bird Eye says Bollinger Band's previous squeeze bottom band drops top levels off. Let's check it out. And then I'm going to go what Keto asked me to do an overlay of IWM and AMC, and I'm going to do that right after we check the Bollinger Band here. I just see a widening of the bands here, so it does look like I just see a widening of the bands here from June's run up. This is on a daily interval, of course, but I just see a widening of the bands, and then it looks like the bottom curls a little bit faster than the top. Yeah, the bottom definitely is curling faster than the top, but that's already well past the top of the top point. And then January's run up. Same thing. It just blows right past the Bollinger Bands, and the bottom side starts to curl in. Well, actually, the bottom and the top both curl or both go sideways, and then a little bit wider, and then the bottom starts to come up first. Yep, bottom comes up first on this one over here too. All right, let's take a look at this the overlay. I'm going to pull up AMC here, and we wanted an overlay of AMC, and I may not be able to do this. I hope I can. Compare, and we're going to compare IWM. I am not an expert at using this, so let me try to do the best that I can here. Let's make I guess this is probably because it's showing a percentage, so that's probably not a bad way to look at it. Let's zoom back out here. So you probably want to see like specifically like a certain period of time, and I'm going to get rid of some of these lines in here so they're not distracting. So I'm on a 15-minute. Let's go to let's just stick to the 15-minute. Let's stick to the 15-minute here, and then we'll check out day here in just a second. But let's go back to June specifically. Oh, I can't. Not on the 15-minute. I'll have to go to 30. I don't have a paid subscription, unfortunately, so because I don't have a paid subscription, it doesn't allow me to have that ability to... There we go. So this should be the June run up here. Come on, zoom in on it. Does not want to show me. This is where I need AP. You know what? I'm not going to use TradingView. I'm not an expert on TradingView, so I'm not going to use it. I'm going to use what I know. I'm going to use Webull. Hey, look, there we go. Starting to get a nice push there. I'm going to use Webull because it's just I prefer Webull. We're going to get rid of the noise. So IWM was running up first this morning. You can see the run up on IWM starting right about there. So it was about a minute earlier. I'm on a 1 minute chart. IWM started running before AMC did right here. But IWM this morning has been constantly up like throughout the day, whereas not so much the case for AMC. And you can see that there's obvious differences between these two. So, but let's look at it from a daily pattern. And let's get rid of all these lines to get rid of the noise. And specifically the June run up. So what you'll see here in IWM, and I'm trying to draw back just a tad bit so you can kind of see. You can see the line on the page is where I have the mouse, so it's equal amounts of time. So here's the beginning of our run up right here on AMC, where price was 1242. Runs up to about 14 bucks, drops back down to about 1276, and then starts taking off 13, 14, 16, 18, and then boom, 20 right there. So if you look over on the right hand side where you have IWM, you can see the line right there where IWM was starting to take off. It was definitely starting to take off, and we peak out right here on AMC, which is a little bit before IWM still continues to run after that. Now, I believe, and somebody can correct me if I'm wrong, but I believe that at the time when IWM was had GME inside of IWM, there was GME shares inside of IWM. So if AMC stopped running, well, this is June. This is June I'm looking at. I don't know. But IWM definitely continues on further. You see the drop right here shows up in IWM late. And when we have a second peak on AMC, IWM actually starts the peak late. It starts its second peak late. Then here's the rundown. We followed that rundown. IWM starts to spike a little bit, and here's our spike up. IWM falls down first, and then AMC follows. IWM has a little peak back up here again, a secondary peak back up, but AMC does not follow. And then IWM runs up to 244 right here, and AMC doesn't follow. Nothing. Then you have a fall, like a really bad fall on IWM, all the way down here to 208. From 244 all the way down to 208-ish. And the fall of AMC was pretty much, we had a fall during that period of time too, where we went from 45 down to 20. IWM starts to head back up. AMC again didn't increase during that period of time. Then it falls. IWM falls again from about 220 7 down to 188. And AMC proceeds to fall from 27 down to 13. So then you have another run up on IWM right here, which corresponds to our little tiny run up right there. It falls back down. We don't fall hardly as far as they did. And then another run up here on the daily, which we're not really seeing the effects of quite yet. So it really looks like when IWM tries to run, they try to suppress AMC from running. When IWM falls, they let AMC fall with it. I don't know what you laughed at, Hansa. Oh, you were laughing at what Nosa said, maybe? I don't wish that. I don't wish that at all. I don't, in all honesty, like, I don't wish that on anybody. Watcher, I agree. Dan says, hello, apes. Have I missed any good news? We're up. We are officially up for the day. Let's see, we're up 0.3%. Is it time for me? It's time for me to do the next. I kind of delayed a little bit there, trying to cover some things. So let me refresh my data real quick here, and let's see what's going on. Let's look at our numbers. Wait a minute. Hold on a second. What was that? Hold up. Oh, okay. I saw something. I thought I saw something in my account. I was like, wait a minute, what's going on here? It wasn't related to me. I thought it was. I was like, what? All right, taking you guys over to the other page here. And let me move over my screens. It scared me for a second. It really scared me for a second. I was like, wait a minute, what's going on with my account? It was just an example. All right, let's check it out. Let's see what we got going here. Off exchange an hour ago was 52.96 and 13.57. It is now 54.1 and 13.4. High amounts of off exchange price discovery manipulation. 54.1, well over the 30-day. Also, the CBOE EDGX is almost 1% higher than the 30-day average. Super high numbers. Let's see if Ortex finally got their act together. Let's Still the same numbers. Nothing new. Redonkulous. I'm gonna tell him I want my money back. I really should. What was I gonna do? There's something next. What's next? Options. Highest amount of call options for an hour ago was $20 strike price with 11.9 thousand contracts is now 13.4. On the puts, at a $16 strike price, an hour ago there was 16,000 contracts. There's now 16.8. There's a secondary movement in put options at a $17 strike price that are forming. Not, it's about 10.2 thousand, so it's not quite there yet, but a secondary wave. Orders by Fidelity customers. I'm really shocked, honestly, that AMC has been in the top 10 all day today. 3, 6, we're in 7th position, which means to me that the market just has like zero activity going on right now. 71% buys to 29% sell ratio. It's been really strong all day long. Super, super strong. And GME still not on the list. I know it went through your head. I didn't even say it this time, and it went through your head. I know it did. I didn't even say it. I'm not going to, but I know it went through your head. Power. I have power. 650,000 shares available. Looks like they borrowed about 50,000 there, and then another additional 50,000 out of the ETF, so another 100K borrowed in the last hour. And that's putting us at 2.6 million shares borrowed according to Stonko Tracker for the day today. 17.5 thousand contracts are in the money on the calls. 74.3 thousand contracts are out of the money on the puts. Trigger price for SSR was 16.49. It's not been triggered. Looks like we broke outside of the descending parallel channel much earlier than anticipated. The Nasdaq is up 1.71, Dow Jones is up 1.97, and the S&P 500 is up 2.05. The market is advancing over declining with 5,133 advancers to 2,385 decliners. The VIX is down 8.94%, IWM is up 2.5, Tesla is down 0.05, Amazon is up 0.84, Cinemark up 2.32, Doge is down 1.06, Bitcoin down 1.18, GME is up 1.53, Hood is down 2.85, and AMC is up 0.16. Our inflow versus outflow is currently a 3 million spread with more outflow. 23.46, getting really close to the bottom prediction of volume that I had for the day today. Let's see here, what kind of pace we're on. We're on pace for 40.3 million shares traded for the day today. My suggestion was that we'd hit somewhere between 25 and 45 million shares traded. Volume did pick up a little bit here on this run. The highest stick of volume here was 503,000 shares. On the daily, we have almost a crossover here of more selling pressure than buying pressure with RSI at 49.48 right down the middle. On the hourly, we have more buying pressure than selling pressure with almost a crossover again, with 51.65 being the RSI, which is right down the middle. On a 30-minute interval, more buying pressure than selling pressure with a crossover just now. within the last 30 minutes, and RSI at 53.35, which is right down the middle. On a 5-minute interval, more buying pressure than selling pressure with an RSI of 67.2, so we're probably going to see some mild consolidation before seeing some more upwards movement. That's going to be the bounce back down to the Bollinger or the simple moving average. We'll take a look at this right here. Doesn't look like it. Not really. I'm starting to think it looks more like none of these. Because we're just past the halfway point. Here we go. What if it's like this one? So you get your initial reaction right here, your downward spike coming up, come back down, a little bit of sideways action, falling down in price, a little sideways action going up in price, a little sideways action coming down, doing a little bit of noise, then running up. So far, I'd say we're right on track for this pattern right here. That looks very much like what we're doing. So this would give us a closing up price equivalent to about where we're at right now. So we could see closing price real close to around 1830 for the day today. Failure to delivers are every 15 days, Pebbles. Vortex is still off. VIX wasn't up 8% in the pre-market, Bird Eye. That was actually yesterday's data. It doesn't trade in the aftermarket hours. So you were seeing yesterday's closing amount on the VIX. Yeah, Jeff, it looks like number 6. I agree. I didn't see what you'd written, but I'll give it to you, Jeff. You got it, number 6. What are you guys looking at? What are you saying? Just look at it. What are you guys referencing? What am I looking at? Before people were posting dark pool price, was that I don't even know where that came from. Dark pool price. Pebble says you win a Casey shirt that I'm too sexy. Right. Let me just check something real quick here. So I'm going to tell you guys something very, very interesting. So the VIX is tanking, right? And I'm going to go over to it real quick here. I'm going to show you something. But I find this extremely interesting. Where's my markers? Oh, it's on the day. It's on the minute. Look at that. It's still happening. Three ascending red candlesticks, a green candlestick, and a red candlestick. The VIX is still heading up. Even though the VIX is down, the trend is still there. It's still heading upwards. Why am I telling you this? Because I bought an options contract. I bought an options contract. I bought a call contract on this. It's down negative 9.9% right now. It's down 9% and I'm still making money on it. Why? Because the market's starting to believe. The market's starting to believe that even though the VIX is down, that the volatility is still there. Take a look at our vortex indicator down here. What do you see happening? I like to think of this as like somebody yelling in a microphone, and you get highs and low peaks. This is somebody shouting. This is a nuclear bomb going off. Any questions? It's still heading apart. It tried to go back the other direction. The selling pressure tried to go back up, and it was unresponsive. It tried to go back and have another crossover, and it was unresponsive, and is still heading up. VIX is down 9%, but these indicators, they're not saying that. They're saying the opposite. Somebody is really, really trying to keep this thing from blowing up. MCon said another YouTuber's line, just look at it. Oh crap. I don't want to be a YouTuber, MCon. I really don't. That's not what I want. I don't want the title. I just don't. It's dirty. Vortex isn't showing anything right now, Bird Eye. I'll pull it back up so we can see it though. Yeah, it's still not reporting. It's showing March 1st data points, and it's not even showing, it's only showing March 1st data points. That's it. So it's reporting all of yesterday's data, but it's not giving current prices on this. It is showing NASDAQ prices up top. Oil's up 5.55%. But it's not updating any of the information that we want to see. It's all just it's crap. Oops. I don't I didn't have Ortex in January. Bird Eye. So I didn't have Vortex back in January, but I did have it for June, and I don't recall. I wish I could tell you the answer, but I don't recall. And I feel like that's something that I would have remembered, but I don't. So forgive me. Forgive me for not remembering. I feel like that would be pretty significant. Ford announces separation of legacy auto and EV business to give startup speed. Guess they want to challenge Tesla. I mean, I don't know. Let me check and see if Ortex actually responded to my tweet. I am curious about that. I see that other people liked it and retweeted it, but Ortex has not responded to it. Do you remember the neon, Jeff? Well, of course you do. I'm sure you, since you bought Ford, you must know the neon. Back in 1994, I was in my senior year of high school, and I took economics with Mr. Woodyard, I think was his name. I owe a lot to that guy. I really do. An incredible teacher, and he ended up being the principal the year after I graduated. He ended up being the principal of the high school. But he taught me so much about American government because it was a split class. One half of the year you did American government, the other half you did economics, and that economics class was so amazing. He gave us a project, and I'm sure a lot of teachers do this across the U.S. in schools, but he gave us a project where we invested a fake $1,000 into the blue chips in the market back in 2004. And I picked Ford. Ford was one of the investments that I made because of the neon. The neon was doing really, really well for itself back then, and I felt like, you know, it was a good investment. The goal in the class was I think the top 3 individuals got bonus points in the class for achieving the top earnings on their invested $1,000, and I came in like 4th. It pissed me off. It pissed me off bad, but I had picked things like Snapple, Ford. I forget what else I picked. Wish I could go back in time and see, but it's really funny if you go back and you look at what those prices were back in 2004, or sorry, 1994 versus what they're at now. Buy and hold works. It so works. Let's just look at it. Let's just look at it because I gotta see. I would imagine if we just looked at Ford, right? Let's put it on the weekly. Oh, you know what? It's down. I would have had to have sold somewhere along the way. Buy and hold didn't work for Ford. Let's see what we got here. 1984, 1998. Let's see, 94 was right about here. And Ford, I remember Ford was one of the ones where I thought I was going to do well, and it actually didn't do me so hot. It started tanking. But Ford back then was $18.46, which ironically is about 40 cents lower than what they were. Ford doesn't work so well on, on buy and hold. Let's try a different one. Let's try Snapple. Is Snapple still a? I feel like Snap. No, that would be Snapchat. What's Snap? Did Snapple merge with somebody? They probably did. Yeah, they merged with Dr. Pepper. Yeah. There's nothing for this, but go back. I don't know, go back in time and look at some of your favorite companies from way back in time and look and see how they've done over time. Some of the, even just blue chips, you know, just having your money tied into blue chips. How did they do over time? Because more than likely they're up a lot higher, just not Ford, than than what they were at when back in 1994. Just not the 2 I tried to look up. I'm trying to remember what some of the other ones were. Bird Eye says Ford market cap is almost 10 times AMC 4x volume, and price is still lower than AMC. Let me check something real quick on Ford, just out of curiosity. So their average volume, their average 3-month volume is 107 million. Their free float is 3.92 billion. Wait, 3920. Yeah, they're not heavily shorted. I wouldn't say that Ford is heavily shorted. I mean, just looking at their volume levels compared to what they have for a free float. Yeah, Jeff's probably right. Most of the car companies probably have tanked. Bird's Eye said that they're talking to lawyers before before they respond. Yeah, the car companies have suffered over the years for sure. I'm really trying to remember some of the other ones. I want to say Google was Google. Google couldn't have been one of the ones. 1994 was too early for Google. Was IBM? IBM was one of them. Yeah, I'm pretty sure IBM was one. Let's just check IBM just out of curiosity. That's not what I wanted. What did I click on? So if you invested in IBM in 1994, the price would have been about $13.74 a share, and they're at 124 now. So, even if you just stuck in like $1,000, you got yourself like seven. We'll just call it an even 73 shares. So that now would be worth $9,000. So your $1,000 would have 9x'd over how many years? That's actually really not that impressive. 9x over, I don't think that's that impressive. Let me think about that for a second. Let's see, how many years is that? 30 years? 98, yes, 30 years. So, those aren't terrible returns. It just doesn't seem impressive because it's low money. Those are pretty good returns. And I don't even really consider IBM to be doing all that well. In fact, I bet you there's a period of time in there where they did better. 183. Yeah, 183 is what has been one of their highest peak points. InterQ stock and Tel Aviv market when they legalized weed. Let's just say we did. How much did they jump? How much did they jump by? I bet it's pretty high. IBM in the 70s was better, probably. Yeah, IBM's really not that great now. Apple. What if you bought into Apple though? In 1994. I don't know if I don't think I bought Apple. I was a real huge IBM fan. I did not like Apple back in the 90s. Holy Toledo. A mere fraction of the price. 94 in 94 it was like 0.322 cents a share. So you could have gotten yourself 3,000 shares. I'm just rounding down a little. 3,000 shares for $1,000 back in '94. and then now it'd be worth a cool 500K. Has that been, yeah, that's insane. This chart scares me. This chart really scares me right here because I go like, where's the down? You know what I'm saying? Like where's the crash on this? Is there going to be a crash on this? Because it's just like there doesn't seem to be like any kind of like specific crash for the size of where this is moving to. And so it just makes you wonder, like, okay, when's the downside coming? So yeah. Oh yeah, not including splits. Great point, One Love. That's a great point. Who knows how many splits they've had in here? But yeah, but where's the downside on this thing? It's there's gonna be a downswing eventually. And I mean, this is COVID. Not affected, not really. Not a whole lot of impact there due to COVID. 2008. Here's the 2008 correction. They went from $6.45 down to a low of about 280. That's kind of rough. They lost 2/3 of their market share value from 2008's crash, but then after 2008, it was just like nothing but just upwards. I mean, not there is some downwards movement, but I mean it's pretty healthy looking. Price went from $8 to 3,500. That's insane. I'm a little surprised. I'm a little surprised that none of y'all called me out on something this morning. Father saying he said I was either cheating by getting advice from my father or I was too good for high school. Either way, I wasn't welcome in the class. Once again, true story. True story. In my economic class in high school, I had the same task. I picked a penny stock that was 1/64th of a cent, and it jumped to 2 cents, and the teacher kicked me out of the class. Oh man, I love it. I think that's great. I'll tell you what, Mr. What did I just forget his name for? Gosh, I just forgot his name. My economics teacher wouldn't have kicked you out. Definitely wouldn't have kicked you out. And I remember, why am I forgetting his name? It's really bothering me that I just forgot it. When we went through the U.S. or when we went through government, U.S. government, we got to a section about presidents, and we were going through and covering all the different presidents and whatnot. And we got to JFK. We got to JFK, and he started listing off like all the achievements and everything that JFK had compared to like some of his predecessors. And I raised my hand. I raised my hand and I said, "What did he do that was so great?" Because we had covered all these presidents prior to JFK, and the only standout achievement that he had that really kind of felt impacting was the whole getting us to the moon kind of thing, right? It was like the only achievement, but he didn't even get us there. Like it never. I don't think it finished. I don't think they got us to the moon when he was president. And so it never, like as we were covering the presidency, it was just kind of one of those things where it was like he didn't have anything that stood out. And so when I asked the question to the teacher, he like paused. Woodyard, Mr. Woodyard paused, and and he just like sat there and like just kind of he was like, well, and he was stumped. And then the next day he came back into class and he said, you know, I had to think long and hard about what it was that you said and the question that you asked. And he goes, and quite frankly, I think that I came to the determination that it was his charisma that made him a great president, not so much his actions. People loved his charisma. And I thought that was interesting for somebody who had lived through the um, JFK era. Uh, it was interesting to me to hear that from his perspective after he had to actually sit down and think about what kind of great things he had accomplished. It was really more about his charisma than anything that people loved. Doghead, not a whole lot of new stuff going on right now, buddy. It's just another one of those usual days, man. But I didn't live through the JFK era. I'm just telling you what Mr. Woodyard said, so. I have no idea. Let's see if this is still looking like that pattern from earlier that I put up. Because I think it's deviating a little bit now. Yeah, it definitely looks like it's deviating. We got the run up. We got the consolidation. If this is the if this is the section right here that we're in right now, I'd say it took a little bit harder of a downturn than what's showing in this fractal. Let's check out some news here. Who was asking me earlier about, Dog, were you the one that asked me earlier about the whole Vanguard and BlackRock and the 13F? And if you were, did you have a chance to read over that information? What'd you think? Just out of curiosity, because I thought it might have been you that might have asked that. Johnson passed everything Kennedy wanted to get done because no one would oppose them because of the assassination. So civil rights. Hold on a second here. Hold on a second. Wait a minute. Sure, Jeff. Oh, Doc says he also detoured Russia from putting nukes in Cuba. Yeah, the Cuban Missile Crisis. Yeah, but a lot of people would have, some people would have argued that he nearly caused World War III to occur through that. I mean, there's documented historical events that said that we were really close to World War III with nukes at that time. Not saying that he should have let them put them in Cuba, but in all fairness, we do we do have our own missiles from the United States close to Russia as well. So it's not like it wouldn't have been unfair, but probably one of the best stands historically, defensively from a United States standpoint. So I would agree with you. Is definitely taking that stand was huge. Taking that stand was 100% huge because um, if he had allowed those nuclear weapons to find their way into Cuba and station there, think about how we would be feeling right now with nukes pointed at us from Cuba. Probably would feel a little different than nukes pointed from Russia. Just a little. There was something I was going to look up before you guys said that. And I don't remember what it was. Oh, I know what it was. They have a let me just make yeah, that's right. They have a LBJ here in Austin. I don't know if you guys know this or not, but here in Austin, they have the LBJ Library, Presidential Library, and you can go down to the LBJ Presidential Library and check out a lot of the different presidential memorabilia slash artifacts from his presidency that are there. And the funny thing is, when you mention that, who said it here? Because I want to give credit. Mm, Doc Stock said it. Uh, when you go through Lyndon B. Johnson, I started reading over all of the different documents that he had in there in regards to civil rights. I had no idea that those were uh, all passed by Johnson. Had no clue. When you go through that library and you start reading some of the civil rights stuff that was passed by Johnson, and then you start to think about how much credit he probably got for signing off on everything. Yeah, big time. Especially if those were JF. I'm not saying they weren't JFKs, but I didn't live through the past. I would assume you're right. Um, that would have definitely put JFK down in the history books as being, um, uh, as far as getting things changed in the United States would have been amazing. Um, because because you go through that library, the LBJ library, and you start reading all the stuff that's in there that was signed off by him, and I just had no clue. It was really interesting reading the letter from um, why can't I think of her name? JFK's wife. I can't think of her name off the top of my head right now. But it was interesting reading the letter that she wrote to LBJ um, after he took office. Because I don't know. When I read the letter, I couldn't help but feel like she was insinuating something. That was a really interesting letter. Jackie, thank you. Jackie Onassis. I don't know why I couldn't think of the name. Thank you, Shane. I'm really bad with names. LeBron James. No. I'm talking about Jackie. Jackie Onassis Jackie Kennedy wrote the letter to LBJ after he took office, and you can read it in the Presidential Library down here in Austin. And it just there's something about it. I honestly can't really place my finger on any specific thing that she said in it. It just, the feeling that I got when I read it was just kind of like, I felt like she was insinuating that her husband was killed, or well, obviously he was killed, but that it was beyond just that there was something nefarious happening. It's crazy to see those documents too. Right. Like, I don't know. I just got that feeling. I like to try and assume nothing when I'm reading documents, but when when I read her letter, I got that feeling. All right, it's time, guys. Time to look at the numbers. If you guys have a presidential library, if you're here in the U.S. and you have a presidential library where you live, like I really didn't, I don't think I've ever been through any other presidential libraries. Maybe I might have once before, but to my knowledge, the LBJ Presidential Library was the first library that I've ever gone through. I can't wait to go through more. I quite honestly really thoroughly enjoyed it. I'm not necessarily I'm not a history buff at all. It was really fun to walk through that library. Um, there's so much history there, so much history that if I do take a tour of the United States, I'm gonna hit up every presidential library I can because I think that would be just really cool. And I'm not even a history buff. My mom used to do that with us. She used to take us to like Civil War museums and battlegrounds, famous battlegrounds. It's really cool. I mean, it's really, I guess you get a different feel when you're standing on a location that was an actual battleground, and then you see artifacts and stuff like that. You just get a different appreciation, I guess, for everything that occurred in the past. All right, let's take a look at these numbers here. Off exchange. Oh wait, I got to transfer 2 pages over. 1 second. All right. Off exchange. 54.10 and 13.4 an hour ago. Yep. Okay. So mark this down, guys. I'm starting to see a little bit of a trend. We have like a rise in volume up until about 1 o'clock every day, and then you start to see a fall in volume. Let's see if this starts to become a very normal trend or pattern that we see daily. So the trend is going down now. So off exchange is dripping down to 53.95, but still well over the 30-day average. And the CBOE EDGX is at 13.47, which is a full percentage point above the 30-day average as well. So very high off exchange values, but they are dipping. Taking a look for Poopy Head Ortex, still not updating their information. So I'm not even going to read it. Updating options at a $20 strike price. You know what? I don't know why I haven't done this. I should look at other companies and see if those are reporting. Why didn't I hate myself. I hate myself right now. I know better. I need to do better. I'm not thinking. we're going to take a look at Ortex here in depth in just a minute. At a $20 strike price, an hour ago we had 13.4 thousand contracts. We now have 15.1. And at $16, we have an hour ago 16.8 thousand contracts. There's now 21,000 contracts at 16. There's been a lot of put volume showing up at $16. A lot of put. Very, very interesting. Quite surprised by that, honestly. Let's take a look at Ortex here, an in-depth look at what's going on with Ortex. I want to find out, I want to get to the root of this. Is this Ortex on AMC only, or is this Ortex on everything? What can I look at? Oh, I guess GME. Trying to think what I would know the numbers from. I guess I won't have to know the numbers. I just know, yep, they're not reporting accurately either. Look at that borrow change, 400. Just not 1,000, not 100,000, not millions. It's 400 shares. Their borrowed change for the day today is stuck at 400 shares. Let's check something else out. And their estimated short share interest of the free float stuck at 1815, which is what it reported this morning. So no changes to that one either. Let's check out another one. Let's check out something neutral. IBM. Why not? We talked about it. $3.01. Yep, same thing. Same value. Borrow change 24.4 thousand shares. Yeah, it's all the same reported numbers. No changes. Let's look at one more. Can't believe I'm going to do this. BBIG. Can't believe I'm doing this. This is like a whole new level of dirtiness. Okay, now theirs has changed. Theirs was okay, but that might have just been because the borrow change amount is very, very low at 300,000. But their reported short interest rate now is 22.31, which is just slightly lower than the last reported data point, which was 22.45. So I don't think any of Vortex is reporting. Where the heck is it? Oh yeah, 22.4. Yeah, I think Ortex is just not reporting anything across the board. They are down. I need to be more investigative. Guys, you need to be on top of me, because that was unacceptable for me to wait until like 1 o'clock in the afternoon to find out that they're just shut down 100% across the board. Let me go back to one. They never even printed a cost to borrow. All right, I got to check this out because this is going to be this is IWM. Yep, they're not reporting. Who is they? Who is they? Whoever they is not allowing information to get reported. There's no reason for this to be down. I'll check down detector here in just a minute, but I haven't heard of any kind of outages anywhere. Haven't seen any problems with streams. I don't know. Orders by Fidelity customers, AMC 3, 4, 5, 6. Sixth position with 70% buys and 30% sales. This is weird. GME is not in the top 30. I'm not going to say it again, but I know it's going through your head. Maybe not this time. Maybe not this time. I'm going to say it though. Later. 12, that's an hour ago, so I've already recorded these. So no new shares borrowed in the last hour. 17.5 thousand contracts are in the money on the calls. 74.3 thousand contracts are out of the money on the puts. 16.49 was the trigger price for SSR for today. NASDAQ is up 1.78. Dow Jones is up 2.13. S&P 500 is up 2.14. The market is advancing over declining with 5,195 advancers to 2,341 decliners. I really honestly, don't say it. Don't say it. I gotta say this. I feel like I gotta say this. Like, I really feel like we're seeing heavy market manipulation to make the stock market perform well after the presidential speech from last night. I think they're trying to boost investor confidence. And I think that and this is purely my thoughts and my opinions only, and they mean absolutely squadoosh, but I think they're going to rug pull this at some point. The VIX is down 8.67%. IWM is up 2.81. Tesla is up 0.63. Amazon is up 0.84. Cinemark is up 2.71. Doge is down 1.16. Bitcoin is down 1.62. GME is up 2.64. Hood is down 2.97. And AMC is up 0.22. Our inflow versus outflow. We have 5 million more in outflow than inflow. And our volume has broke my lower limit of 26 to 45 million shares. I said 25 to 45 million shares a day. We're at 26.33. Let's see what kind of pace we're on. We're on pace for about 36.5 million shares traded for the day today, which is going to be really close to the middle ground of my 25 to 45. Our daily interval, we're still more selling pressure than buying pressure and not quite crossed over yet, with a RSI of 49.4, which is right down the middle. On the hourly, we have equal amounts of buying and selling pressure with an RSI of 51.19, which is right down the middle. On a 30-minute interval, just slightly more selling pressure than buying pressure and an RSI of 52.67, right down the middle. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 58.05. It's cooled off. This was much higher earlier. RSI was really topped out. It's cooled down quite a bit. I think I should attempt the typical oh shoot. I think I should attempt the typical reset, reboot for Ortex and see if that's the case. What's going on? Jeff, were you? Who was the one who sent me that information this morning on Twitter? Hold on a second, Jeff. Silent sent me some information this morning, and I sent him a message back earlier. Janice says this feels very bullish to me. Say it. I'm gonna try a typical reset on Ortex just because I want to make sure that I'm not like. Sometimes you gotta do the whole IT thing of did you try rebooting? Don't you start with me? You guys ever get that? Uh, it always bothers me. It's like, do you think I? Of course I tried it. I don't want Ortex being like, did you try rebooting? Did you try deleting all your cookies and restarting it? Oh, don't you start with me. Don't you do it. Okay, still the same. I'm not deleting my cookies though. I tried a completely different browser. I didn't try my phone though. Jacob, I'm not going there, man. I'm not going to go there. That's what I'm thinking too, Jenna. I mean, literally, you have Powell saying that there's no problems with inflation. I didn't listen to the whole thing. You guys heard way more than I did, but Powell got up in front of Congress and said that inflation is caused by this war. Like any kind of signs of inflation issues or inflationary issues are caused by this war. And no. And they're also saying supply and demand, or not supply, but what's the word I'm looking for? The stocking, the restocking, or whatever that's called. The supply, the distribution of inventory is causing the fake bubble. This is not fake. What we're seeing is not fake at all. I told you guys earlier, I've got ties to people who are in retail. There's issues. There's some serious issues going around. Saint Monet's dad saying my Ortex is showing the same. I read what one love for life 71 said. Unplug it and count to 10 and then plug it back in. Don't you start with me. Oh man. I hate that. I hate that. And you know what drives me more nuts than anything? You call in, you're somewhat computer tech savvy, right? You make computer chips for crying out loud for your whole life. And then you call up somebody on the other end of the phone and they go like, well, we're gonna have to uh, flash your entire hard drive and get you back to normal. we're gonna reboot everything. We're gonna flash the hard drive. We're gonna start you from scratch. And it's like, this is stuff that I had to deal with back in the 90s. And it's like, no, you don't understand. Like, we don't have to start from scratch. Like, there's ways around this. Absolutely no. So let me check it out here real quick. Hey, did I close out? No, there it is. I don't see it. Did you share it with Notice I'm making you a moderator so you can just post it here. I know, right, Thick? I mean, it's like we're gonna have you use this high tech, magnet. We're gonna. Oh man, Mom, don't kill me for telling this story. I know it's not really you that's gonna be pissed, but Tim will probably never know. He'll never know that I told this story. So my brother. Oh yeah, I actually have that pulled up already. I always have that pulled up over here. Notice this dark pools. If there's something specifically there that you wanted me to, I can post it in here. I have it pulled up, but I don't look at it very often. I'm not incredibly versed in the dark pools. I do know that they say that when this value drops underneath the zero balance and becomes negative, those are usually signs of when we normally, I think, squeeze. So if we go back and look in time, the June run up of 21 would have been right here. So this was like a huge indicator here, where it started to take this dive down, but I'm not seeing that currently. But yeah, this is I'm not like too heavily versed in all this information and how it's pertinent. I'm not a dark pool expert. Yep, Vortex is still on vacation. They're a bunch of poopy heads. Subliminal messaging you guys into going to the movies. In the menu on the left, let's see here. Wow, I actually haven't gone through this. Yep. Price versus short volume. I'm gonna throw this back up on the screen over here. It's kind of interesting. Look how much higher short volume percentage was prior to the June run-up. And look at the spread now in contrast to it. It's actually if I put it up here, it's one of the highest. Our short interest volume is one of the highest points that we've ever had. And the separation, it's pretty big. This short volume right here was really, really low this day because I'll bet you, almost guarantee you that was the 223. I almost bet you that was the day that the what was it called? I'm having a problem remembering things. Security lending volume. Let's see, what day was that? Security lending volume was, nope, that was the 7th. 23rd. Short volume on February 23rd. Let's look at that. I'm kind of curious why there was a spike down in short volume. Batman. Ah, dang it. What did I say? Which date was it? Let's see. February 23rd. First what I'm going to do is I'm actually going to go back and I'm going to look at total volume that day. Total volume that day was 30 million. So it was really, really low volume. Let me see what you guys are writing here. I'm reading what you guys are writing here. I'm sorting GD's mail. It doesn't. I thought the same thing too, but it doesn't, Bird Eye. It's the 23rd is not that many days ago. The 23rd is on the calendar. The 23rd was a week ago today. That spike was 16 days ago in total trading days. So it would have been like the 9th. The spike was the 9th. And I'll double confirm that it was on the 7th. I was close. The spike in utilization, I think, happened on the 8th. It was like the very next day. Yeah, the 8th. So the security lending volume was up the day before, and then the spike in utilization went to 100% the next day. So February 7th was security lending volume up to like 70 million shares, and then the utilization hit 100% the next day. So the utilization came from, the 100% utilization came from the security lending volume. And that's why we're still at 100%. So when I sit there and I say the kitchen sink still exists, that's why I say it. Because if it didn't exist, our utilization would have dropped because they haven't been returned. Now the crazy thing about that is that those security lending volume those are supposed to be meant as short-term loans. They're supposed to be meant as like very short-term loans. So 16 days is a long time for those shares to be out on loan for. And if they were returned, we would see utilization start to drive down. But that's not the case. I can give you some other pages as well. That's one of the pages that I kind of keep open all the time. NOSA, just in case I want to check it out and compare. Also, I'm looking at the down detector, and there's actually Xfinity by Comcast. Cox is having issues. Mediacom, Target, Indeed, Hulu, and AWS are all having outages. And AT&T, spotty. I've got some rolling outages. Is Joe hitting it? Is Joe punching out? Have a good one, Joe. Take care. Don't have a good day. Have a great day. Oh my, it's 1:30. It's 1:30. I need to take a break. I'll tell you what, Anosa, maybe I should spend some time kind of showing you guys what pages I keep open, just in case it's stuff that you want to keep open. I think there's some really useful pages that you can look at that I just always have running in the background to give you an idea. Some of it's not related to, I mean, there's only a couple that are not related to the stock specifically, but just to kind of give you guys an idea of what my of what I'm laughing because I think it's funny. To give you an idea of what my taskbar looks like for my Google Chrome, this be it right here, and it's like internet, the YouTube stream, Reddit. This is Nasdaq, Yahoo. I've got usually at least two different Fintel open. I have that dark pool page. I have a options calculator page. I don't even know what this one is. What is this one? Oh, this is the beta calculator. This one right here is the beta. This one right here is the beta calculator. I didn't realize I had that saved because I think I went looking for it the other day and didn't even realize I had it open already. What else do I have saved up here? What is this one? Oh, apparently exempt. This is apparently exempt right here. This is the down detector. These two are the music that I put on when you guys are away. This is Twitter. I don't know why that one's open. I get rid of that one. That's gone. I got two different, what is that? Trading View. I have it all. I got AMC open. I got a definition for something. I don't know what word I was probably looking up, but I was looking up a word. What does it say? Oh, yeah, I was expecting somebody to ask me what EBITDA, which I can't even pronounce, was, and I wanted to be able to rattle it off, but was afraid I wouldn't be able to, so I just had the definition pulled. David, you're back, man. You're back. It's good to see you. But David says, Casey, do you believe in the numbers AA gave us yesterday? Where did he get those numbers from? Did they do a secret share count or something? I honestly don't know the answer, buddy. I really don't know the answer to that. It makes you wonder. It does make you kind of wonder. I don't have the answer to that, but it does make you wonder where that information came from. All right, guys, I gotta take a break here. So I will be back in 30 minutes, and I'm getting blown up. I'm getting blown up by my sister-in-law. Apparently, we have something special to toast to today. I, I mean, it's a cool thing. It really doesn't mean much to me, but apparently everybody else seems to think it's a pretty significant thing. So I'll let you guys know what that is when I get back. Ooh, I'm hooking lines and sinking you guys to being here for when I come back for the toast. It's not that big a deal, but I'll toast to it anyways. And I'll see you guys in a little less than half hour. Well, I'll be back at 2 o'clock. See you guys in just a bit. All right, I'm back. What do we got here? Q, I saw your message. I know I'm not streaming. Well, I know I'm streaming 9 hours a day. I know I'm not on the entire time, but breaks are necessary. When I get done with this keto, I'm done, man. I'm telling you, it's exhausting talking for 9 straight hours, or most of it. And I guess what I would say is that I've tried to entertain the idea or thought about like trying to do extra work, like putting together bits and pieces of portions of the day. It's tough, man. It's tough. I'd like to. I'd like to be able to do that, but I, I don't have it in me. I don't. It's hard. It's hard. That's all I can say. Um, so the news. It's time to toast. Yeah, no, I'm back. So here's the deal. Alan, howdy. I'm about ready to toast. That is not what I wanted to read. I'm about ready to toast to something kind of cool. It's a milestone for me. A lot of people have been talking about it. Family has been talking about it. My sister-in-law subscribed to the channel. She was the 1,000th subscriber, which is apparently some kind of milestone. To me, I don't look at it as like that. I see people who are hungry, starving, thirsty, tired of not getting good information. And I want to be a place, I want to provide that. I want to provide information that is hopefully accurate as I can possibly be. But I am a human, I'm flawed, like everybody else. But I see 1,000 people, at least, who want more. I'm here to document history. I give you what I can. And we go through this process together. So to my first 1,000, because maybe there'll be more. I don't know. I'm not promoting. Maybe it ends up being more. Maybe it stays at 1,000. It doesn't matter because it's history. That's what I care about. So to history, cheers. I don't feel like it's 1,000. I just don't. I don't know what to say. 2 weeks, 2 weeks. You say it like a parakeet. Thanks, Remtech. I mean, I'm just doing this, right? You know, it's not it's a thing. Appreciate it, Alan. Thanks. Moving on. It's just another day. It's not the catalyst. I wish it was Noah. Nosa. I said Noah. Nosa, I wish it was the catalyst. But it's not. It's not the catalyst. Although, I will say this. You know, Eric, who's one of my moderators, also my brother-in-law, and he made a prediction, I think on Monday, and he said you'll hit 1,000 by the end of this week. He's absurdly good at predictions. And I was just like, oh, okay, sounds good, thanks. And then my sister-in-law was like, congratulations, I was your thousands. And I was like, oh, that's cool. All right, taking you guys back to the stats screen. All right, 1,000. We celebrated it at 500 or something like that, I think, at one point too. That's just numbers. Off exchange at 54.18, and the CBOE EDGX is at 13.49%. That EDGX is, I mean, these numbers went back up. I actually expected them to go down on this last review of the day, but they didn't. They went back up. So price discovery being hidden some more into those off exchanges. Eric just texted me. I gotta read his text. Give me a second here. He says one away from 1,000 subs. Apparently the number is going up and down, up and down, up and down. I don't know. Who cares? Some people are like, I want to be the thousands. No, I'm gonna unsub and sub back in, so I'm the thousands. You guys are crazy. Oh man, too funny. Bad backs. Ortex. Ortex is updating. Look at that, 5.23 million. That is a lot. 5.23 million shares borrowed for the day. I think my heart just skipped a beat. That is juicy. Dang. Do you think that's why they were not reporting? That raises the estimated current short share interest of the free float up to 20.58%. That is something else. That's a lot. Cost to borrow 3.14. Dang. Everybody's blowing me up on my text messages. All right, guys, I get it. It's a thing. Oh, okay, they're sending me different. It's like, let's see here. Man, those are insane numbers. Insane. Man, I can't wait to see how much is on loan tomorrow. That's gonna. Oh shoot! I didn't even think about this, guys. That's going to drop the on loan average age per day massively, right? And what happens when that number starts dropping? When it reaches a bottom, up we go. Oh man, oh man, oh man. 5 million shares. Oh, that's hefty. That is super, super hefty. I got little tiny goosebumps. They're not big yet. Because we haven't seen the numbers. We'll have to wake up tomorrow to see them. But that's pretty big. Those are big numbers. On the options today, the $20 strike price is no longer the leader of the pack. It's now 19. So it dropped $1. At 20 an hour ago, there was 15.1 thousand contracts. At 19, there's now 17.8. On the puts, highest amount of volume currently at a $16 strike price. An hour ago it was 21,000. It's now 21.4. And I don't know. I kind of want to like show you guys like Ortex or something, but I really don't have anything to show you. I mean, you're seeing the data. It's not going to report it until tomorrow. So I'm really stoked about waking up tomorrow and seeing the data tomorrow for what it is. Orders by Fidelity customers. AMC top six. 69% buys, nice, to 31% sales. Nothing wrong with that. GME. Come on. Not on the list. Jimmy can't come out to play when his shares are locked away. Shares available to borrow, 600,000. Let's see if there's any change here. It looks like they borrowed some more shares. Is that a borrow? No, 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 that's from earlier. Nope, no new borrowed shares. 22.1 thousand contracts are in the money on the calls. 76,000 contracts are out of the money on the puts. SSR 16.49 for the day today. We never hit it yet. Batman. The Nasdaq is up 1.76, the Dow Jones is up 1.84, and the S&P 500 is up 1.96. The market currently has 5,225 advancers to 2,313 decliners. The VIX is down 8.16, IWM is up 2.55, Tesla is up 1.11, Amazon is up 0.92, Cinemark up 2.33, Doge is down 1.32, Bitcoin down 1.55, GME is up 2.5, Hood is down 2.55, and AMC is up 1.31. We currently have more outflow than inflow by a 4 million spread. And we are just about ready to break 30 million shares traded for the day today. Let's check and see what kind of pace we're going to hit by the end of the day here. Let's see. We're on pace for 33.8 million shares traded for the day today. I suggested between 25 and 45. It looks like we're going to hit really close. Really close to right dead center target on that. I suggested to you guys that we would close somewhere around, the market was suggesting we'd close around 18. It's now kind of signaling for 1750, so we might get a push down here before the end of the day. We'll see if we close. 18 is max pain, but the options are signaling for 17. Well, let me see. What are they signaling for? Signaling for, yeah, 17 and a half in the options. On the daily interval, just looking at the vortex indicator and the RSI, we have more selling pressure than buying pressure, but no crossover just yet. RSI at 50.31 and starting to head back up. On the hourly, we have more equal amounts of buying and selling pressure with an RSI of 54.5 and increasing. On a 30-minute interval, we have a crossover within the last 30 minutes with more buying pressure than selling pressure with an RSI of 56.95. And on a 5-minute interval, we have more selling pressure than buying pressure with an RSI of 65.8. Looks like we might need to cool off just a tad bit here. Looks like price is trying to come back down to that simple moving average after kind of hugging the, touching and hugging the I don't mean it like that, but it sounds like that. I'm saying touching and hugging because it literally touched it and is just hugging the line and coming back down to the simple moving average. We just touched the simple moving average. So we'll either get a rejection off of it and start heading back up, in which case you'll start seeing volatility starting to increase again, or short positions will try to push the price back down below the simple moving average. GD says, why can't they come out to play? I thought they just created fake ones. It makes a difference. It makes a difference. Less shares available to loan when the shares are locked away. I'm not presuming that Computershare is not loaning shares, but they're not loaning the whole shares. They may be lending partial shares. And I proved on the show before that they do indeed allow you to purchase partial share ownership, which means that they could loan out those shares if they wanted to. Who's going to count the number of beers Casey chugs during Power Hour now that mentioned it? Who chugs? Frank the Tank from Old School. I don't even know what that is. Frank. All right, hold on a second. Hold on a second. I don't know what you guys are talking about, so I got to look it up now. Frank the Tank. Old School. What are you guys talking? Oh, I have not seen this. But who doesn't like Will Ferrell? I like Frank the Tank. I'm gonna have to watch it. I have not seen I have not seen this. Frank Old School. I'm gonna have to watch Old School. And then maybe tomorrow I'll play. It looks like maybe there might be a song from that I can play. I'm kind of excited that I haven't seen a Will Ferrell movie. I'm honestly quite surprised I haven't seen this. Don't hate me. Let's see. AMC Wild, nice to see you. I don't recognize the name. Keto, we've been crushing the Max Payne as of late. That is true. True story. You know, their suspicion, David, well, this is what I think. Throw on your tinfoil hat. Just go ahead and put it on right now. I'm just going to tell you, find some aluminum foil. You know what? I'm going to start something. I'll be right back. Yep, I did it. Oh, wait a minute. There we go. I did it. That's my tinfoil hat. It's literally my tinfoil hat. My tinfoil hat is on. And I want you guys to think about something here. Think about this. I got my tinfoil hat on. Hold on. Okay, here we go. Tinfoil hat. Do you guys remember when? My gosh, it sounds like I'm in an echo chamber right now. It's so bad. Check this out. Trey posted a long time ago, "Hey Adam, I'd love to talk to you again." Remember how Adam Aaron hasn't talked to Trey in quite a while, and a lot of people started wondering why? And then all of a sudden we started hearing about DOJ investigations. It would not be far-fetched, in my opinion. Tinfoil hat on, right? Tinfoil hat's on. But it would be not far-fetched, in my opinion, to believe that Adam Aaron is under a gag order of being able to talk to or about specific matters. That being the case, it is very likely that Adam Aaron may be privy to some information that has been discovered and reported to him that he can't talk about. So he is, however, required to give reports on Q4 meetings. And so therefore, he may be able to hint towards certain things without saying how he knows those, how he has that knowledge. So, yeah, there's that. And this tinfoil hat really is annoying. So, give me a second here while I remove this. And for all y'all out there who are afraid that I'm just going to throw this away right away, I'm going to keep using it. The tinfoil hat's going to be on. We'll make it a regular thing. But yeah, we'll bring the tinfoil hat back when we need to. I don't know that for a fact, MCon. I really don't know that to be the fact. I did, however. Uh, Casey's jumping the shark for ratings. Right, sure. That's definitely not the case. But here's the thing. I don't know that for a fact, but I did call Trey out on something a long, long time ago. And Trey actually responded and called me back out and said, no, that's not the case. And I suggested that Trey and Adam Aaron were no longer under talking conditions, like something may have happened between them. Trey very adamantly responded and said that's not the case. You don't know what you're talking about. But oddly enough, ever since then, Trey and Adam Aaron have had no further contact to our knowledge beyond that. And then Trey later on went on and on the, his little Adam Aaron, we want to hear from you kind of rant thing. So um, maybe Adam Aaron just can't talk, and he can't. It's not that he can't talk to Trey. It's just that It's not that he doesn't want to talk to Trey, but it may be the fact that he can't talk, and that would be frustrating. And if I was Trey, I would totally understand why that would. It's like we used to talk before. You used to text me all the time. We knew they used to text back and forth, and then all of a sudden, radio silence. Why? It makes kind of sense to me. Casey, that is the funniest thing you've done, I'm pretty sure. Okay. I don't know. I particularly more enjoyed the day when we went around and crashed other people's live streams and said 2 weeks. I thought that was a lot of fun. AMC Wild says, speak. Looks like he's got the speak no evil. Yeah, that's what I'm going to use it for, Nosa. 100%. The tinfoil hat will go on for conspiracy mode. And might as well. I mean, I always say tinfoil hat, so I might as well have one. It didn't. I don't think. That's what it thought. That's what I thought. Crypto. I really thought there was a breakup between Trey and Adam. But Trey was very adamant when I said that. When I suggested it, Trey was very adamant in calling me out and saying that I was wrong. But they never talked again after that. And so I was always kind of like, why would that be? Well, now we have the DOJ starting to do investigations. It's possible he may be under a gag order. There may be things that has been specifically told he cannot talk about. If he jeopardizes an investigation by the Department of Justice, I'm sure they will not be kind. Yep, Adam Aaron's lawyers may have warned him. There's lots of reasons. David says, "How are the hedgies with the 10%?" That's the problem, David. Is I think you're thinking that everything is related to the hedgies, right? And we've all done this. It's not just you. I think we've all made assumptions here that what's occurring, or when we refer to them as they, hedge funds, right? My mom used to do this all the time. I used to tell her they, and she'd be like, "You keep saying they. Who's they?" Well, she knows now. She's completely understands who they is now. The problem is that the they that we talk about all the time may not necessarily be the they that we think that it is. And I feel like I need to put the tinfoil hat back on, but there may be entities involved here in trying to keep a market from crashing that are not necessarily hedge funds, and are allowing this to continue the way that it is so that they can try to correct this as best as possible without there being a market crash. I don't know that we know, Shang. We don't know if they sold them or are still holding them. I've done some crazy stuff in my life, Danny, but I've never done streaking. I've never done that one. So I told you guys about the theory about the well. If you hadn't heard it, I'll tell you a little bit about it. Sure, I'll talk about that right after I say what I'm going to say, Mitch. Well, actually, I'm going to talk about yours first. It's real simple. I can keep it really simple for you. The money to pay us off has to come from somewhere, right? Money just doesn't magically appear out of trees and leprechauns and I don't know what other things create money. Jack and the Beanstalk beans. Money comes from places. In order to make a payout to us on a margin call, companies who were shorting the position against AMC would have to be liquidated. If they have long positions in the market, gone. Market tanks because that money to pay us off has to come from someplace. So, and it's the easiest explanation, right? Once the liquidations are done and there's still money that needs to be paid out to rectify the short positions that are still open or the synthetics that are out there, then the money has to come from someplace else. And in that case, that's when it starts turning into insurance money from the DTCC. Man, I feel like when I say DTCC, I feel like I say too many. DTCC. It's really weird to say it. But going back to what I was saying about the if you guys have played the video game Uncharted 4, there is and it's also in the movie that just came out, Uncharted, which is about the video game. There's a spot in the movie where they walk into, I believe it's a lighthouse, if I remember correctly. They walk into a lighthouse and there's a well, a really big well there. And I think that was the part of the game. Maybe I'm wrong. I don't know. It's been a while since I played it, and I haven't seen the movie yet, so don't ruin it for me. But anyways, when they walk into the room to where the well is, the guy who plays Mark Wahlberg in the movie goes, well. Now the interesting thing about this is that, and I'm kind of ruining the movie a little bit for you here, guys, but I got to tell you this because it won't make much sense if I don't. They're searching for pirates' treasure, the booty. They're searching for the booty. And in order to get there, the pirates have created a treasure hunt, so to speak, and it takes two pirates to find the location of the treasure, and one must go to heaven, and the other must go to hell. So one pirate gets unscathed in the adventure, and the other pirate goes to hell. So there may be a reference to very specific reference from Adam Aaron, knowing that he's a movie guy, a movie buff, a very specific reference to the pirate's booty and one going to heaven and one going to hell. Yeah, you know what's crazier, Dr. Zeno, was the earnings report from Citadel, where it said that they had like $60 billion in unpurchased synthetic. Well, it doesn't say synthetics. Somebody help me out. What does it say? It says, I got to go back to it. Hold on a second. Oh, Danny, I've interviewed True Demon, incredibly brilliant guy, smart dude, and I think it's a great. If you want to learn something cool, I would definitely check out their channel, 100%. Hold on one second. I'm gonna find this. I'm pretty sure I retweeted this. Yeah, there it is. Securities sold, not yet purchased at fair value. This is Citadel Securities statement of financial condition as of December 31st, 2021. Under the liabilities and members' capital, they have securities sold, not yet purchased at fair value. What I think is hilarious about this, that they're estimating the fair value, but they haven't purchased it yet. They have securities that they've sold, but are not yet purchased. And they're estimating the fair value to be $65 billion with a B. Because remember, this is expressed in US dollars in millions. $65 billion worth of securities sold, not yet purchased. I'd be interested to know why they seem to think that $65 billion is the going rate. Batman. And Danny, we actually did go over to True Demons live stream when we did the crashing. They were the least fun. And you know why? You know why they were the least fun out of all the groups of people that we went and visited? Because I'm telling you, they're focused. They are focused over there. Those guys are some focused individuals. And let me tell you, if you want some good DD, Danny, I'm 100% say I stand behind some of the DD that they give out. Do they make mistakes? Yep, we all do. We all do, but I definitely stand behind some of the information that I've seen True Demon put out is amazing information. Adam Aaron coming up on CNBC. I wish I had a link to it. I won't be able to see it, I don't think. Ooh, great question, Duncan. Great question. Because my guess is, if I had to guess, it's probably based on current value. I'll bet you it's based on current value, which means that it's, they're going to owe a lot more than just the 65 billion, 65.7 billion. I go see it tomorrow night, Shang. I haven't seen it yet. I know there's some people on the channel that have seen it, and I've asked them not to ruin it for everybody. I'll tell you what, though. I don't know if it's worth asking if it's worth it. You're invested in a company that makes money on whether or not you watch movies. What do you think? Is it worth it? Buck seems to think that he's alluding to a website. Should be Mitch, it would be the hedge fund. But it's not just Citadel, right? Remember, there's lots of hedge funds in this play. That's one of the things that kind of gets me the most. It seems like most people seem to only think of Citadel when it comes to hedge funds. There's a lot of hedge funds in this, and they're not even number one. I think they're like fourth or fifth down on the list. There's Susquehanna. There's others. Let's see. Let's pull them up. It kind of bothers me a little bit that the other ones don't get as much. Is notoriety the right term? Susquehanna is number one. This is based off the Fintel report that I just pulled. Susquehanna is number one. 683 Capital Management is number two. Simplex is number three. Citadel is number four. Jane Street Group is number five. Group One Trading is number six. IMC Chicago is number seven. Altea Capital Management is number eight. Goldman Sachs Group is number nine, and White Box Advisors is number 10. Only the top 9 hold more than 1 million shares in short interest reported. Yes. And I'll give you the link if you want to look it up yourself. You can go there to that link. You can click on owners. You can go to short interest owners. And then when it pulls up the page, all you got to do, and I'll show you. When it pulls up the page, it's going to look like, I think it'll probably send you to the overview page. Once you're on the down to where it says insiders, or sorry, owners. Come on. Owners, you stink. Owners. Sometimes patience is a virtue. Owners, short interest owners, and then when it pulls up that page here, short it, short the shorters, sort it by shares. Give it a click twice, and it'll show you the order from the most short interest of these companies that are shorting it. That's right. Donald did say this before. I remember that. Thank you, Donald, for reminding us. I appreciate that. He did mention this. Peter, Paul, and Mary's song, Well, 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 where they talk about it implies margin calls. Nos is saying to also Google the lyrics for the song Wrong, Wrong, Wrong by the Fastbacks. I think they were playing that on a space call just the other night. I don't think I have access to it, Donald. I'll give you, if you can give me a link. I don't think I have access to it. I made you a moderator long enough to give me a link for it. If you do, we can listen to it. But I don't think that I don't think I'll have access. I don't typically. You got to pay for that stuff. You know, Mr. Pumpy, I'll tell you what it is. COVID hit. COVID hit, and a lot of companies felt like they should short companies who require um, people to come and view where they need an attendance of people, right? And so companies out there were like, well, we can start bankrupting all these companies that and start being able to collect on the bankruptcy of a bunch of different companies that require attendance of people during COVID. And that's what they did. They started shorting them, trying to bankrupt the companies. And AMC was not the only one. GME was it was another one, and GME wasn't even GME wasn't even a an attendant type company, but there were others. I don't think Donald's going to give us a link, unfortunately. I can try it. I can try looking it up. Let's see here. I don't see any links. You got it. It's more than 4 million. I would put 4 million plus apes because we really don't. We only know that there's 4 million eligible voters. That's all we really know. So 4.1 million eligible voting apes is what they're in a fight with, plus all the other ones we can't count. What did I have for price prediction? 1730 to 2030? Wow. Keto's close, 1813. Monty's out of the running right now. It could change. Cannonball's out of the running right now too. And 24/7 Culture, who came on earlier this morning. 24/7 Culture, if you're listening, I don't know if you're out there, if you're listening, don't feel bad. You came in with a price prediction today and it was bold. Very bold of you to just come up with a price prediction. Not everybody does it. It doesn't have to mean anything. You don't have to get it right. But whatever you're doing, whatever indicators you're looking at, get better. And I'm not saying that in a bad way. I'm just saying you can fine tune it. I almost said the S word. I'm crappy as hell at this. Crappy as hell. I am by far not the biggest winner on this board of people who guess every single week. But I'm getting better. And the more I fine tune things, the better I get. And so I would challenge you to do the same thing because you can. You can absolutely start looking at things differently. It's not that easy, believe it or not, to guess within a $3 range. To guess the price on this stock is really, really difficult. It's super difficult. It doesn't seem like it, but it is. Shane, you're 100% right, man. That's who I'm talking about. Those people are not counted as eligible voters unless they can vote. But yeah. Don't feel discouraged, 24/7 Culture. Come back with another prediction. Come back stronger. Come back smarter. Or even crumb back. But don't give up. Well, see, here's the thing, Jenna. This stock plays by rules. But what we're doing is we're exposing how dirty those rules are. And I think through that exposure, we're making changes. Did you know that I wish I could remember the number that was read off. There's been more changes to proposed rules, or more changes. There's been more rule changes and proposed rule changes this year combined than like ever. I don't remember what the number was, but it's like you could add up all the revisions and changes and everything from the past for a very long period of time, and it was just like we are making massive amounts of changes right now in contrast to the past. So we're making things happen. The rules are changing, and that's a good thing. Jacob says it's all triangles and wedges. It really does. It does feel like that, doesn't it, Jacob? That's really what it does feel like. Other than the ascending parallel and descending parallel channels, and then a few other, there's actually quite a few other things that are in there, but most of it feels like wedges and triangles. I agree. Mm. Who's got the low number? Cannonball. Cannonball's got 1918. He's got his fingers crossed right now. September 2022, Adam Aaron expects popcorn to be on the shelves in the stores. That was the only thing that I don't remember him saying last night. Not sure if he gave a time frame last night. He did not. And based from the thank you for reporting back, Donald. I appreciate that, man. That was really cool of you to do. Based on the information that I have from people who are in retail, they're not seeing it showing up on a list to be stocked on the shelves yet. So that would make sense why it's a little bit out from now. Ooh, it's ripping. There she goes. If I could hand out fake points to you, Donald, I would. I mean, I can hand you. I just awarded you 50 fake points. Congratulations, Donald. I appreciate your participation. It's like, whose line is it anyways? I just where I hand out. What is that line that he says all the time? Hold on a second. I gotta look it up. where everything is made up and the points don't matter. That's right, the points are like insert funny fact. That's the spiel. That's what he says. Welcome to welcome to Whose Line Is It Anyway, where everything is made up and the points don't matter. That's right. The points are like this beard I have. I don't know. I can't put it. I don't know anything. I don't have any funny facts to throw in. Failure to deliver points. Yeah, Drew Carey is the best, man. Actually, all of them. Styles. What's his first name? I don't know what Styles' first name is. Is it Ryan? Ryan Styles? Ryan. Yeah, Ryan Styles. He's my favorite. I love Ryan Styles. That guy is so. Oh, that guy is so funny. I just can't. I can't with that guy. He's just nonstop funniness. Tano, I'm glad that today's song rubbed you the right way. Because honestly, I thought for sure that it was not gonna come across good. You know what, Danny? To be honest with you, every single one of those comedians on there is funny. There's not a single one on there that's not perfect for that show. They were every single one of them did their job perfectly. I don't think I've ever seen there wasn't a bad one on there. Here comes the single digit orders. Steve Harvey's he's hilarious too. There used to be a period of time on my YouTube channel, or not my YouTube channel, but my YouTube homepage, that nothing but Steve Harvey clips would come up from Family Feud. I can't get enough of those. You know, I was gonna make a joke. I was gonna make a joke later on or earlier today, and then I just never did it. Where I said, "Well, I don't want to give it away. I don't want to give it away, Tano." And some of the people who are here right now don't know what the song for the day is going to be. So, GB18, welcome, welcome to the family. Honestly, what do you see happening tomorrow? Man, Thursday. Well, let me tell you this. We're going to end on green. A Green Day is a band, but beyond it being a band, whenever we have a Green Day on Wednesdays, that gives us a 13% chance of having a Green Day on Thursday. 13. Versus if we have a Red Day on Wednesdays, we have a 29% chance of having a Green Day on Thursdays. So a much lower percentage. So if we have a Green Day, and I don't like to try to predict the future, but I will say this. If we have a Green Day tomorrow, then it's a reversal of a trend. Because normally we shouldn't see green on a Thursday after having a Green Day on a Wednesday. So I'm just going to tell you what to hope for. Because if we have a Green Day and we see a reversal off of what we've done today. Oh, and today, by the way, let's see. Was today reversal numbers? Yesterday was red. I actually can't tell you what today should have been. I think today had even amounts of odds. The odds were even either direction. green days on Wednesdays are the worst odds we have, almost. So the fact that we had green so far for today is, who said stop saying you're saying green too much? Pebble said it. Cannonball's got his fingers crossed right now. Or she. I don't know. Could be a she. Well, guys, I hate to say it. Space Ape doesn't even like red on lipstick on women. I don't like the really I shouldn't even tell you this. My wife watches a lot of makeup channels, and so I'm watching them with her all the time. I really don't like the bold red lipstick. You know, you don't have to have really bold red lipstick. It just doesn't have to be there. So I'm kind of in agreement with you on that one. Hey man, GB, you're not the only one from the UK. We got a lot of people over here from Europe. So welcome to the family. Lots and lots of good people. All right. It's that time of the day, guys. Eat, sleep, drink. Get plenty of rest because tomorrow is another day. Spend time with your family, spend time with your friends, spend time with your pets or your kids. But whatever you do, don't have a good day. Have a great day.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Temperature separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward leg now in estimate. Okay, you sound good. Discovery Houston, negative return. Copy, negative return.
I'm too sexy for my love, too sexy for my love, love's going to leave me. So sexy it hurts, and I'm too sexy for Milan, too sexy for Milan, New York and Japan. And I'm too sexy for your party, too sexy for your party, no way I'm disco dancing. I'm a model, you know what I mean, and I do my little turn on the catwalk, yeah, on the catwalk, on the catwalk, yeah, I do my little turn on the catwalk. Too sexy by far, and I'm too sexy for my hat, too sexy for my hat, what you think about that? I'm a model, you know what I mean, and I do my little turn on the catwalk, yeah, on the catwalk, on the catwalk, yeah, I shake my little touch on the catwalk. Cat.